Okay, so welcome everyone to Bangalore Investors Club's Free to Dream session, in which we are going to discuss looking at creating significant and meaningful wealth for ourselves and our families through smart investing in the stock market. Basically any stock market in the world, but we'll focus on the opportunity that India presents in the next many years ahead. The reason that the session is called Free to Dream is basically because there are a lot of things that you and I want to do in life, and the first thing that we need, or rather we think of almost automatically whenever we want to go after something, is can I afford it? Do I have the money? And you obviously know what the answer is. More often than not, it's like we don't have enough money, and over a period of time we just become resigned to saying, life is tough, it's not going to be possible to achieve a lot of things, and then we start to sort of cut down on our expectations from life and ourselves. And mainly because we find that creating the resources that we need to have a great life tends to be limited. Now this might sound like another great session on having a great life. Well, actually it's not. By no means is it easy to create large wealth, but when I say meaningful wealth, what I mean is wealth that has the potential to meaningfully alter your life into a much better standard of living, not only for yourselves but also for your family and your loved ones, right? I am not going to be discussing individual concepts or stocks or what you should be buying, etc. Not in this session. We could definitely have another session for that. I want to just discuss the large opportunity that presents itself to us, which has already always been there, but many of us actually don't sort of maybe really take full advantage of it. So the idea is just to wake us up from perhaps sleeping with our eyes open, if I may say that, no offense to anyone, and really get us to see what is in store, right? So having said that, with that brief introduction, let's jump in. So the reason like I was saying, why it's called Free to Dream is because I'm hoping by the end of the session you will start dreaming again about your families, about your future, and what you could do within our lifetime. This is not a get-rich-quick scheme, by the way. It's not about giving you stock tips tomorrow. It's not about trading techniques or trading advice. No, none of that. But if we took the market seriously and committed time and effort to learn what is possible, then what is in store, right? Okay, so the reason, like I said, why it's called Free to Dream is to really get us to be free to really dream big, right? Okay, so with that, so this is actually a full PPT that I use in my interactive live sessions whenever I host them at the Bangalore Investors Club or wherever we get invited. I don't think we're going to have the time, and an online session is obviously very different from doing it interactively in person. So I'm going to be skipping through some slides, and generally, depending on how the conversation goes, I'm going to highlight some versus others, and I might just skip others altogether. And if you're interested, we can always have another session sometime in the future, right? Okay, so hope we have a great session. So the first question that I have is, why do you work? And it's a pretty standard question. Nothing great about it. You've been asked this a lot of times before, but basically it'll be stuff like this that applies to everyone. Doesn't matter whether you're a doctor or a lawyer or a software guy, a businessman, for your living expenses, you want to build a home for yourself, maybe for your children also, you want to take care of your children and get them educated, get them married, maybe invest for them, provide them a sort of financial foundation. And then we have our aspirations, we have our holidays, our cars, our homes, travel the world, do a little bit of maybe charity, etc. Well, this applies to everyone, but there are some things which perhaps we really don't look at, but we are interested in, and one of those is inheritance. Now, what I mean by inheritance is not about, we don't really think about creating an inheritance for our children, do we? Let's be honest. We are mostly more interested in the inheritance that we can get, and some of us perhaps are waiting for that inheritance to come, and we want that inheritance to make our lives easier and better. But if you're a really long-term financial planner and looking for the great financial foundation for your children, grandchildren, then planning for inheritance itself is a great opportunity in terms of what we could offer for our children before they enter adulthood. And like I said, if we have time, I'll talk more about that later. There's one more reason we all work, but we ostensibly never really take that seriously. And you know what that reason is? That reason is you pay taxes. So it's not like you work for the government. We all hate working for the government unless, of course, we're getting paid. I'm not talking about being a government civil servant. I'm talking about no matter what job you do, what business you run, there's something called TDS. And what is TDS? Tax deducted at source. If you really think about it, the government has the first right on your money, not you. Please take a moment to think about that. And this is important because that's not necessarily the case when it comes to investing in the stock market. In the stock markets, as some of you know, just to digress a bit, if you're looking at, say, long-term capital gains tax, then it's 0, and short-term capital gains tax is a flat 15%. And you're actually working for yourself. Whereas in almost every other endeavor of life, you pay 33% tax. That means 1/3 of your life, 1/3 of your income, 1/3 of your effort. That means 1.5 days of your week is actually spent for the government, and what's left after that is actually your money. Think about it, because this has a lot of implication in terms of how you want to live your life, how you want to engage in wealth creation, etc. We tend to think, what can I do about taxes? Well, I'm definitely not saying about avoiding tax, but being smart. The rules are very different for investors and to some extent even traders versus almost every other category of person in whatever wealth creation that they do, right? All right, so why do you work? Think about it, all these things. I have this question. What is contentment? And I'm not looking for, by the way, please put in any comments you have in the chat box or the question box. I'd really like it to be interactive and have fun. So if there's something that somebody says, then I will say it out, and maybe we can all have a laugh or at least discuss it if there is something that's a question. Well, I'm not talking about contentment in terms of what do I say? A textbook answer. I'm not looking for there's no right answer, there's no wrong answer. I'm asking what is contentment for you, right? And the next question is, are you content? And my take is that most of us are really not content. Some of us might say we are content, but I really doubt whether we are content at all. And my simple challenge is, if anybody says they're content, just take them, and I'll sponsor this. I'll give you 6 vouchers for a mug of beer at any restaurant that you want, right? The condition is you find somebody who says they're content, and then take them and just give them that good time, and then you'll see all the sad story of their life come out, and blah blah blah. This one is like that. I don't have enough of this, and I don't have enough of that, and it goes on. You know what I'm talking about, right? Well, here's a definition of contentment that you might want to think about, right? Contentment is when your earning power, all right, is equal to your yearning power. Does that make sense? Does that make sense? Right? Thank you, Abhishek. Right? So all of us have a lot of yearning. There are a lot of things that even the richest man in the world wants more, and that comes from yearning, right? And no matter how much you have, you want more. Now, what's the stuff that we normally do in life to take care of this lack of contentment issue, or this thing what I like to call the dream gap? You have a dream gap. All of us have dream gaps, and there is this gap between what we want to be in life, where we want to be in life, the sort of standard of living we want, versus the resources. And what we do basically, so the dream gap is basically the gap between what we aspire for and the resources to fulfill our aspirations, right? If anyone has a different point of view, please put that up and let's talk about it. And what do we do to fulfill this, or bridge this dream gap? What we do is basically we compromise on our aspirations and we try to enhance our resources. And the way we do it is, get a postgraduate degree, go abroad, work hard, etc., And when it comes to even after having that extra money, compromising our aspirations in terms of saying, you know what, I still can't get a 3-bedroom house in central Bangalore because it costs 5 crores now, right? An independent house is what I'm talking about. So let me go out, and gradually over a period of time, your 3-bedroom house becomes a 2-bedroom house, and instead of being in the center of Bangalore, it's 30 kilometers out, and then there's the traffic and blah blah blah. You know what I'm talking about, right? Instead of having that big TV or I don't know, some really nice audio system or whatever, we are all compromising. You know exactly what I'm talking about, I hope, right? Now there is one problem with this whole effort that we do about this dream gap, right? Is that we are paying two very big time costs for this pursuit that we have. One is our health, and the second one is our time. That is, we are spending a lot of time, and some of you know exactly what I'm talking about. You're spending 12, 14, 15 hours a day, going to work, traveling up and down. Saturdays, Sundays just become a time of rest, and desperately needed rest, and just getting the groceries, washing the car, doing the laundry and stuff like that. So you have no time now for the really important things in life, like birthday parties, PTA meetings, visiting friends and family in a hospital, or during Christmas or Eid or Diwali or whatever that comes along. I'm just busy. Everybody's so busy. And you're wondering, 10 years go by, 15 years go by, 20 years go by, and you're wondering, what happened? So I made money, and that but just becomes bigger. Some of you know exactly what I'm talking about. If you're perhaps 40 plus, 45 plus, definitely if you're 50 plus, you definitely know what I'm talking about. But if you are in your early 20s, you might not really relate to what I'm saying. I'd love to meet you again after 10, 15 years and have this conversation again. So time. The other thing is health. Most of us are not healthy. And the thing is this, if I'm going to do anything today which is going to talk about creating wealth, but is going to take away more of your time and more of your health, then I'm not serving anything at all by having that conversation. What I want to have is a conversation about how can we narrow our dream gap, right? So, by the way, there's a mistake in the first slide, in the slide here. There's nothing like equal to. That equal to will never happen. Okay, there's never going to be earning power equal to earning power. You can only bridge it. You can't make it smaller. What we're going to talk about is we're going to look at the importance of financial literacy and look at the importance of financial planning. The cost we pay for not knowing something. All of us have heard the proverb, ignorance is bliss. Yes? Tell me if you have. How many of you know that that is not really the full proverb? Ignorance is bliss is not the full proverb. Do you know what the full proverb is? Anyone? Let's have some answers, please. Do you know what the full proverb is? Or can you think of what it could be? The full proverb actually is, ignorance is bliss till you find out how expensive it is. Think about that. Ignorance is bliss till you find out how expensive it is. Right? And that's what I'm going to basically be talking about today, about how we are paying a huge cost for not knowing about the opportunities and how the system is actually taking us very often actually for a ride. We'll also talk about the benefits we can all enjoy by learning and applying this knowledge to our lives. And you know what, you don't need to do a 4-year degree for this. It's a lot of it is just common sense, but like you've heard and you know, common sense everyone has, very few of us actually apply it. So I'm just going to appeal to that, what we already have, and see what we can do about actually having a much better life, right? Okay, so how am I going to basically demonstrate this financial literacy and financial planning stuff, right? So let's look at a lesson. Let's look at how fortunes are not made. And what I want to say here is, some of you who know me know that I have tended to do a lot of things upside down in my life, and that goes into how I, talk about money and talk about wealth. First, let's look at how we actually destroy our future and look at how we make unfortunate and wrong decisions about wealth in our lives first, right? So, I'm going to just take one example, which is getting what's best for you versus getting what's best for everyone else. Okay, getting what's best for the system, right? And how not making correct financial decisions is actually costing a hell of a lot of money. So I'm going to take the example of life insurance. Can you just put in the chat box what sort of insurance cover you have? I'm not asking which company's insurance you have. What type of insurance do you have? Uh, Generally, broadly, it is term insurance or ULIP, or it is endowment, and it is money back, right? So let's get some answers in. Great, we now have more than 20 people on the session. That's nice. All right. Okay. By the way, those of you who are saying ULIP policies, great. I just want to know how many of you have actually ever logged into a ULIP policy account and actually, churned your portfolio, as in, you converted it from an equity portfolio to a debt portfolio to a balanced portfolio. If you have ULIP, did any of you do that ever? How many of you, and somebody is actually very honestly saying that he or she really doesn't know what type of policy they have. Thank you for that honesty. Really, really appreciate that, right? So, okay, so we've got most of the answers in, I think. And the thing is this. So let's look at, Krishna Prasad says, lured by relatives who are LIC agents. Well, the smiley you have put might actually not be such a nice smiley at the end of next 5 minutes. So, hang on. So thank you all for your various inputs. So some of you have term insurance. A lot of you have all the other types of policies which you already mentioned. So let's take a real example. If you are having an insurance policy worth 10 lakhs, and then you need something which is going to be for the next 20 years, there's a certain annual premium you're going to pay, right? And this is basically the amount that you can pay. Oh, by the way, I forgot to mention something. I should have said it in the beginning. Don't believe anything I say, all right? And that might come as a surprise to you. I'm saying don't believe anything I say because, there are a lot of people who are saying a lot of things. Why should you listen to me? What credibility do I have? So here is what I'm going to say. Anything and everything I say, if it cannot be backed by public data, then, right, if it cannot be backed by public data, then it's nonsense. It means nothing, right? So I'm going to back up everything I say with publicly verifiable information and data. So please, if I'm not giving you data that you can check, stop me and ask me where this information is that I am showing you. So what you have on the screen right now are the annual premia that you would have to pay for different types of policies. So if you were, let's say, a 30-year-old, I'm just going to take that, and I'm guessing that's the average age here. Some of you are, of course, much older, and I'm not sure there'll be too many much younger, but anyhow, right? If you are, say, 30 years old, an endowment policy will cost you 46,000 rupees per year, and money back policy will cost you 68,000 rupees per year, right? And a term policy will only cost you 2,500 rupees per year, right? And why is this big difference there? The big difference is simple because of the nature of the policy. In an endowment policy, once, if after 20 years and if you're alive, you get a big chunk of money which is called an endowment back to you. It's called the maturity value. In a money back policy, the only difference is this money comes to you every 4 years or every 5 years. In a term policy, it's pure insurance. If, since we're talking about life insurance, you have to die. If you die, then you will get the insurance money. Now, that's a funny thing to say. If you die, it's not that you will get the money. It is somebody else who's going to get the money, right? So it's not really an investment if you really think about it. At least it's not for you. All right. Now, let's look at what the system tells you, right? So somebody here who's had some LIC agents, you can collaborate that as their friends, or for that matter, any insurance agent. It's not just about LIC. It could be any insurance company, right? Now, if you look at, what you get versus what you don't get, let's look at this simple thing. For a 30-year-old, you can pay 2,500 rupees per year for term insurance. In endowment, you'll pay 46,000 rupees, which is 43,500 rupees extra every year. In money back, it will be 65,500 rupees extra every year. and this is money you're paying every year for the next 20 years. I hope you are very clear about this. Now, this extra money that you paid, right? Okay, actually, here's a different question. Why did you actually take this insurance policy? Let's have some more really honest answers. Why did you actually take this insurance policy? Can somebody tell me? What was the real reason for taking the insurance policy? Anyone? Come on. Yep, right, bingo. So it's tax saving. That's what you really took it for. Not really to do anything about insurance. It was about tax saving for you. And what has happened is that you probably took this, sometime in December or Jan or Feb. Your HR was sitting on your head and saying, if you don't do this, we are going to cut off your tax. And you said, why the hell should I pay tax to the government? And you said, okay, I need this receipt so I can give it to HR, and that's why I took their policy, right? So that's what most of us actually did. Now, some of you are saying that if the source is lost, then the family can get some money to support itself, etc., safeguarding the benefit of the family. My question to all of you is, did you actually calculate how much insurance your family would actually need in the event of your death? And is that insurance cover that you have adequate and covers that? Now, it's not a, it's both an individual question. I'm not like I'm asking for a public answer, but do you really know whether the insurance amount that would come to your family would cover their requirements? Think about it, right? And I can tell you this, 95% of the people really don't have enough insurance that they should have. Now, that's not what today's session is about. We'll come to, I don't want to get too deep into insurance. I'm just going to use insurance to illustrate the mistakes that we make, all right? So, if you, like most of us, we took this insurance policy for a tax saving, not really anything else. Now, the other question is, how much return are you getting on this tax saving instrument that you took? Does anybody know, percentage wise, every year, how much are you getting on your insurance policy? 6%, all right, anybody else? Okay, so actually, it's a fairly correct answer. If you actually look at the fine print which they would have given you, and go back to that so-called benefit illustration your insurance advisor would have given you, then this is what your life insurance policy would give you, around 5%. And here's a sort of disclaimer: this is for your endowment and money back policies. When it comes to ULIP policies, the company is not promising anything. It is completely a function of your knowledge and your skill in being able to put your ULIP money into the appropriate funds that they offer. And then, of course, about how well they offer that fund, or rather, sorry, how well they manage that fund during good times and bad times. But you know what? It's really a question of you telling the company what you want them to do with the money. And I don't know of a single person, honestly, who has their ULIP login ID password and has actually done a fund switch as and when the financial circumstances of his or her life, or how the markets were behaving, demanded that they make that decision. I don't know a single person, and I will throw a bet here right now openly that none of you who are on this session right now, or are probably, hopefully the recording will be up, who listen to the recording, don't have your login ID password. Forget doing the switch, right? So even if you're talking about ULIP policies, and over the long term, you're not really going to make a great deal of money because it was not managed, right? Now, so great. So Rajesh said he did a switch. Fantastic. Good to hear that, right? So I hope you really did it with the deep market knowledge that about when to switch into what and when to switch back, etc., and all that stuff, right? But you're definitely an exception, and kudos to you. Okay. All right. So generally, your life insurance policy will give you 5%. Now, the reason that you took the life insurance policy, like most of you said, was for your tax saving, correct? Now, I don't want to change any of that. Do you know of any other tax saving products where you will get your tax saving, which is why you took insurance, but will give you a higher rate of return? Do you know any of these? Okay, you've got fixed deposits, which will give you 8%. You've got PPF, excellent Ravi, which will give you, 8.5% tax free. And ELSS, mutual funds, and if you invest at the right time and time it well, then you could get a lot more money, right? So there are other products which could also give you tax benefits, but a definitely much higher rate of return. Do we agree on this so far? Because we need to be absolutely clear about this, because from here on is something going to be really important. All right? Okay. So all of you got something called a benefit illustration, right? You remember? I don't know if you remember seeing it, but it was sent to you by your insurance advisor. And that was something where they basically said, you know, if you are alive at the end of 20 years, this is how much you're going to get. Correct? You remember that? Now, the question is this. If you are investing, so two choices, all right? So let me bring this in. Choice one, take endowment money back, right? Or ULIP for your tax saving, or take term for insurance. Balance money is invested in other tax products, tax saving products rather, that give you a higher rate of return. Is everyone with me on this? So on this you're going to get 5%, say 5 to 6% per year, and on this you're going to still get your tax saving, but you might get 8 to 10% per year. Is everyone on this with me? Are we clear? Now, if you do this, most of the people do this, all right? Choice one. Now, you do this, choice two. Remember, we are not changing anything. You're still going to get your tax saving. You're still going to be investing exactly the same amount of money, which is how much, this 46 or 68,000. You're going to do it exactly with the same amount of time, and more or less you're not taking any additional risk. Are we clear about this? So we have not really changed the broad equations at all. We've just made a smarter choice. So now the question is this. If I invest 43,500 every year for the next 20 years and it grows at 5%, and if I invest 65,500 every year for the next 20 years and it grows at 5%, then how much money can I expect this to grow to in the next 20 years? So what's the maturity value? Does anybody have an answer? Right? So if in case you watch the recording, you might want to pause here and think about this and then play it again. Okay, so we're getting in some answers, but they're pretty off the mark. This is how much it will be. Your 43,500 every year for the next 20 years will grow to 14 lakhs, all right? And your 65,500 per year invested for the next 20 years growing at 5% will become 22 lakhs. So Krishna Prasad is asking a question, what about inflation? Well, here's the thing about inflation. I don't think we're going to have time today about inflation. Most of us really don't understand inflation in the way we should, and I'd love to do another session on this. But the point is this, whether you invest in insurance or real estate or gold or stocks or mutual funds or run a business or anything, inflation is going to hit you in all investments. So because it is there in every investment that we have, we don't really need to think about it. So it's not that this will not have inflation, the other thing will not have inflation. Okay, or rather this will have inflation, something else will not have inflation. That's not the case. It's there across the board. So we really don't need to look at inflation at this point. We're going to get 5% nominal return. Okay. All right. So like I was saying, 43,500 given every year for 20 years growing at 5% will become 14 lakhs. 65,500 given every year for the next 20 years growing at 5% will become 22 lakhs. Now actually that's not what happens in money back, because you're getting your money back every 5 years. But just to keep things simple, this is the calculation, and you can do your math at home and you can really figure this out on your own. Simple calculations. Now this is what happens if you make choice 1. Are we clear? This is what happens if you make choice 1. The question is, if we make choice 2, which is you put that same money but you put it in something which gives you 8% or 10% for the same period of time with the same tax benefits with no additional risk, and that grows at 8%, then will the maturity value be higher or lower? What do you think? Will the maturity value be higher or lower? Okay, obviously if it's growing at a higher rate of return, you're going to get a higher maturity value. Any idea how much? If it grows at 8%, instead of getting 14 or 22 lakhs, any idea how much we might get? And if it grows at 10%, then how much could we get? So just to be, quick about this, again, if you ever watch this recording, pause, think about it, do the math, because you really need to let this lesson sink in. Okay. Now, 8% will give you 20 to 30 lakhs. Okay. So instead of getting 14 lakhs, you'll get 20 lakhs. And instead of getting 22 lakhs, you're going to get 30 lakhs. And if the money grows at 10%, it's going to become 25 lakhs or 38 lakhs. Now my question to you is this: did you invest a larger amount or a longer term to get this extra money? What's your answer? Right? The answer is no, you did not invest a larger amount of money, and you did not invest you didn't lose your tax benefit, nothing, everything was the same except that you got your extra return, right? Had, like Abhishek is saying, had better judgment been used. Excellent. Now, that judgment is actually costing you what? What is the biggest and the least difference that you have here? If we come back to this slide, alright, the least difference is between 14 lakhs or 20 lakhs, which means you could have got at the minimum 6 lakhs more. And the biggest difference you have here is between 22 lakhs and 38 lakhs, which is 16 lakhs more. Are you with me on this? So we're talking about 6 to 16 lakhs more, alright, for just a better decision. Now get the following question very, very carefully. At whatever level of earning you are in life today, how many months or years of your life will it take for you to actually save, not earn? Okay, I hope you're with me. So you earn, you pay taxes, and you have money left over, you have your expenses, and then you save that, correct? That's what I'm talking about. I'm talking about your saving rate, not your earning rate, your net residual income. How many months or years will it take you for you to actually earn another 6 or 16 lakhs more in your life? Again, I'm not looking for a public answer. You know what your answer is. In other words, if you were, let's say, saving 20,000 rupees a month, alright, it will take you 30 months. That's almost 3 years. And even if you're saving 1 lakh per year, it's going to take you almost 1.5 years of your life, 1 lakh per month, which is probably a hell of a lot of money for most of us in terms of saving. Let's be a little more realistic and say 50,000 rupees a month if you're a big bracket earner. If you're earning 50,000 rupees a month, it's going to take you 32 months. That's again 3 years. You're talking about not 6 or 16 lakhs. That's not what I'm bothered about. I'm talking about how many months and years of your life would you have to spend doing what you are doing in order to get this extra return. Are you with me? I really want you to think about this, because if by just making a better decision we could have made this extra money, then we actually saved 3 months of our life, 3 years of our life maybe, or more or less, I don't know. So you can look at this in terms either of money, if you know that appeals to you more, that's fine, or you could look at it in terms of saying how many years of my life is this decision costing me actually, right? So this is the stuff that we really need to think about, right? So I hope this is really making sense. Are there any questions? So somebody said it'll take them 15 years. Well, okay, fine. Then it's 15 years of extra work that you have to do. Think about it. Now, I've just used this as one simple example of what almost every person in this country is doing. Now, I know there are some people who are exceptions, but that aside, look at your friends, look at your family, look at your brother, look at your sister, right? Look at your wife, look at your husband. Maybe look at your children who are earning and started to do this tax saving business. And what decisions are they making and what is the cost of those decisions? It is huge. Unfortunately, nobody is teaching us all this. All right. So I'm just using this one example to demonstrate how ignorance is costing us. Now does it make sense? You know that proverb? Let me put it up here again. So what are the proverb? Ignorance is bliss till what? We find out how expensive it is. Is this now making sense? The lack of financial knowledge, the lack of financial wisdom, the lack of product knowledge, the lack of consequential knowledge, you know, this is what we are doing. It is really sad. Now, Ravi is asking the question, we've already made a choice, how do I correct it? Well, Ravi, I'd love to answer that, but maybe we can do that on another session because there's some things I need to finish today, but let me answer that question in brief. You can't go back on the mistakes you made, unfortunately, right? So let me be very clear about that. I'm sorry it's a blunt answer, but you can't undo what we have lost. But can you make a better decision now in terms of what you want to do in the future? So if you feel you've made not the most appropriate or the best choice in terms of investing or choosing a financial product for today or in the past, then you know basically the question is, what do you want to do about that financial product going forward? And more important than that, right? What can you what should you do to make a better financial decision in the future, right? There are many options. You could close your policy, but there's a problem with that. If you close your policy, then you're going to lose some of the money you have. There's something called the surrender value, which is not the full market value. So sometimes it's a wise decision, sometimes it's not a wise decision, sometimes it's an expensive decision, sometimes it's not. Right now, I would only suggest one thing. Don't take a piecemeal decision to your investment. Take it as one step at a time. Rajesh is saying you can close your policy. I do not fully agree with that. It really depends on how many years are left, right? Whether you should, if it's in the early years, it might make sense, but if it's in the later years, taking a hit on that may not make sense. So there are no fixed rules, okay? You need to basically get yourself educated and deeply educated on various options, on looking at the cost benefit analysis, looking at different consequences, and then make your own individual decision. There is really, honestly, no fixed rule for everyone that will work, okay? So I'd love to, maybe get in touch with me at the end of the session or tomorrow, of course, and we can have a more detailed discussion on this, but there is no, thumb rule on this. The real issue of today's session is to make better decisions for tomorrow, for our children, for our future going forward. The mistakes we've made in the past, forget about them. There is really not much you can do. If you're going to look in the past and try to recover from that, I'm telling you, you're going to waste a lot of time, a lot of heartburn, a lot of regret. It's much better to look forward and say the past was the past, I did it out of ignorance, and now I'm going to do everything out of knowledge, right? I think that's a much better way to move forward. Great, thank you. So this is just one example that I took in terms of illustrating what the cost of not knowing is, okay? So I don't want to make any rules on this, as like I said, so there's a caveat. I'm not saying term insurance is the best. There are other insurance products like ULIP, but you should really know how to use them. Unfortunately, not only in India, this is how the whole insurance system works across the world, which is that most of the time there are either extremely simple, the products you should be looking at which are term but are not suitable for all conditions, which most people don't take. On the other hand, you have complex products like ULIPs where the product itself is good, right? The features are good, the facilities it gives you are good, but it's the user, the policy holder who really does not know how to take advantage of what is being offered. Honestly, it's like having a what shall I say, one of these really advanced cars with all sorts of high-tech electronic gadgetry, but not knowing what knob does what. That's the level it is. So if you just got a Maruti 800 and a simple car, we'll be fine with it. But you have any of these high-tech up-end ones, you're like, okay, what next? I know how to use this and that, but I hope you get what I'm saying. We're not educated by the system, unfortunately, to really take advantage of the products, the sophisticated products which are there. All right, so just to close this part, and please remember, this was just to illustrate the mistakes that we make, and this is just one policy. By the way, if you are, let's say, a family, your wife is also working, your husband is also working, maybe your children are also working, look at the collective cost that you as a family are paying for not having this knowledge. If each of you is losing 10-15 lakhs, 5 people, you're talking about close to 1 crore suddenly. So it's a big cost that we are all paying for not being well versed. Okay, now tell me one thing, and honestly, why did you come for today's session? And those of you who are perhaps going to listen to the recording, if it's available, you're probably now thinking, I didn't come to learn about this. What did I really come for? What did you come for? What attracted you to this session? Tell me. Okay, to learn is nice answer, but let's have a little more blunt answers. So Gregory, right, about the 2.37 crores. How do I make the 2.37 crores, right? So how many of you actually, said, okay, I really want to make this 1 lakh become 2 point, how long will it take and how do I do that? And that's what really attracted you. All right, some of you are saying friends and colleagues invested in stocks and had good returns, so you're curious, right? Some of you are saying, how can I use my money to work? All right, fine. So you didn't really come here to find out all the mistakes you made. You came here to find out how can you have a better future, create more wealth, and hopefully do that without too much stress, too much of a headache, etc. So let's actually now get to the reason for today's session and why you're here. The reason I did the first part is only to give you a sense of what we've lost out on, and if we actually had that knowledge, then what is really possible. So ready? All right. So if you ever refer, you might just want to skip the first 45 minutes of this recording in the future and go to this part. So let's look at the difference knowing and applying knowledge makes, making time your partner, and taking advantage of the financial market. So actually, even before I put this slide, let me ask you a very simple question. Do you have 1 lakh? And I'm saying 1 lakh, that's it. 1 lakh only. I'm not asking you to give it to me. Do you have 1 lakh? Not 1 lakh per year, not 1 lakh per month. I'm just saying, do you have 1 lakh rupees? I hope everybody does, right? It's there in your fixed deposit, maybe, or maybe somebody wants to give me 1 lakh and take back 1 crore. Okay, I'll get them into a deal with you after the session is over if you're still interested, all right? So all of you have 1 lakh, right? And if you don't have it in cash, you have it somewhere which is accessible. That's all I'm asking. So the question is this: if you invest 1 lakh in an instrument that gives you 8%, then after 1 year, 1 lakh will become 1.08 lakhs, correct? If you take the same money, not 1 lakh per month, not 1 lakh per year, if you take the same money and put it at the same thing and reinvest, it will become 1.3 lakhs. And at the end of 10 years, this 1 lakh would have become 2.2 lakhs, all right? And at the end of 15 years, at the end of 10 years, but if you're getting 15%, it would become 4.1 lakhs. Are we clear about this? All right? Yeah. So it's simple calculations, right? That if you do this, then this is how much money you could get at the end of these individual years. Now, my question to you is a little different. I want answers on this. And till I get some answers, I'm going to, uh, give you a few minutes. And no calculators, no mobile phones. The question is, if you have 1 lakh and you can make it grow at 20% every year, 25% every year, or 30% every year, and it grows for 10 years, 20 years, or 30 years, then how much will that 1 lakh become? Alright? So I hope you're all clear about this. It's only 1 lakh. It is not 1 lakh per year or 1 lakh per month. Only 1 lakh. If that 1 lakh grows at 20% every year for 10 years, how much? If it grows at 20% every year for 30 years, how much? So I want some answers. No calculators, no nothing. Please give me some answers. I need 9 answers at least for each of these 9 cells. So use your brains, quick mental math, do some guesswork and give me answers. Okay, so we've got some answers coming in. That's great. Now let's see. Let me get something else here. So this is what we want to do. We want 20%, 25%, okay, 30%, and we're going to do this for 10 years, 20 years, and 30 years. All right. And like I said, it's only one time investment of 1 lakh only, nothing more. All right. Okay, so let's see what we've got. The various answers. Somebody saying, so this is for, you guys are not telling me how many years. So let's see who's got the, somebody saying 20% will be 3 lakhs, 6 lakhs, 9 lakhs, right? So that Abhishek said. Let's get some more answers under this. All right, anybody else? Let's see. Yeah, do your guesswork here. 25, 4, 8, 12. All right. 4, 8, and 12. All right, done. And 30%, 5, 10, 15. 5, 10, 15. So that's the maturity value. Okay. And somebody saying 6 will be 615. Ravi is saying 615. By the way, you should do this exercise with your friends and your family, right? Of course, we're going to cover the correct answer at the end of this. And 12, 30, 50. 30, 50. All right. And then 30%. Ravi is saying how much? 15, 40, and 100. So that's a crore, right? So I hope you really know what you guys are saying, right? So you're saying 1 lakh only will become a crore after 30 years if it grows at 30% every year, right? That's what you're saying. Ashwin has a higher number at 20%. He's saying even 200 here. All right. And Deen Dayal is saying 20 years, 5 lakhs, 20%, 10 years, 20%, 10 years, he's saying 5, so that's another estimate there. All right. Okay. Fine. Done. Like I said, before I show you the correct answer, do this exercise with your friends and family. All right. And just to reiterate, 1 lakh only one time. If you can make it grow at 30%, 25%, 20% every year for these many years, then this is what you guys are saying are the maturity values, correct? Okay. So, how many of you ready to actually look at the correct answer? That is your correct answer. Take a moment to look at it carefully. Think about it, what we are saying here. If you have any questions, please ask. This is the right time to ask. Are there any questions? Okay, Abhishek says that seems really unbelievable. Great, Abhishek, thank you. Anyone else? I really want to know what's going on in your mind. This is one of the reasons I just love to do, in-person sessions, because it's a lot more fun. Deen Dayal says unrealistic. All right, great. Anyone else? Hey, come on, come on. Tell me what's the first thing in your head. Amazing. Not sure if it's feasible. Okay. Anyone else? What about tax? Well, just like inflation, it will hit anything and everything, so it really doesn't matter. Tamala is asking, really? Yeah, really. Okay, Gregory is asking, is it really possible to get 20% for 30 years? Okay. Rajesh is asking, where will I get this sort of percentage returns? Okay, put down all your questions. We're going to answer everything today. And like I said, I'm going to back up everything I say with data that you can publicly verify. I don't want you to believe anything I said because Musa said. I want you to believe it only if I can prove it with numbers. Alright, I hope you are very clear about this. Okay, so responses have stopped coming in. So let's get down to it. So let's be very clear about exactly what we are saying. Number one, I am saying, alright, 1 lakh growing at 20% every year will become 6 lakhs. 1 lakh growing at 20% every year for 20 years will become 38 lakhs. Alright, 1 lakh growing at 20% for 30 years constantly will become 2.37 crores. So if you, depending on, I don't know what you got, the SMS or the BIC post or the email or your friend told you this, he talked about growing 1 lakh to 2.37 crores, right? But you know what? That's only 10% of what I actually wanted to say. What I wanted to say is, yeah, 1 lakh can even grow to 26 crores. 26 crores. And I am not joking. I am not kidding. I'm not making this up. Right? Now there are a couple of things that I need to address before we go ahead. How many of you believe that this is nonsense? This is just a fantasy, that this cannot happen. How many of you believe this number? Any of these numbers that you see here, how many of you think they are true? How many of you think they are untrue? That is just make believe. Right? Okay. Abhishek has a nice answer, says, I don't believe it yet. Okay, cool. Ashwin says constantly earning 30% year after year. Okay. So basically some of you want to know, where are you going to get 30% year after year? Okay, I'll answer that question. You can dream of, yeah, you can dream of 100%, 1000% per year. You can only dream. But no. This is not about, I'm telling you, I'm going to base this on fact. I assure you, actually, you know what? Let me not even waste time saying that. Let me just show you the proof, right? Right. So there are a couple of things here, first of all right? This has absolutely nothing to do with your belief. There is one thing in life that does not lie. One of my favorite statements now is what? Numbers don't lie. Whether you believe this or not, it is absolutely true. Alright? It is absolutely true. So, there is something that you all learnt, but you very quickly forgot. And that was this. P 1 plus R by 100 to the power T. You remember this formula? How many of you remember this formula? Compound interest, right? Now, if you did 10th standard in your life, you remember this formula, or at least you knew it then. Yes or no? High school. Yes, Ashwin, correct. High school. Okay? You remember this formula now. Some of you are wondering what the formula was, and we're all like, I don't know, successful in life, doing all sorts of complicated things, but guess what? Go use this formula, go put 30%, go put 20%, go put 10 years, go put 20 years, go put 30 years, whatever you want, and that's what you're going to get. It doesn't, you know what? I am not saying this. It is the numbers that are saying this. You don't have to believe me. And you know what? Whether you believe this or not, numbers don't lie. If you can make your money grow at a certain rate for a certain given amount of time, that is the result. Your belief is not required. However, having said that, there is an important question. And the question is what? If you don't believe something, you won't do it. Do you agree with me? Whether it's true or not, if you don't believe something, you will not do it. So you also need to believe that it is possible. Then only will you take the steps to actually step into making that happen. Is this making sense? I'm not trying to be philosophical. I'm just trying to be very, very practical. If you don't believe you can't cross the road, if you believe you can't cross the road, even on an empty road, you won't cross it. Yeah? So belief is important. But here's what I'm saying. This is not about belief also. This is about pure fact. You just have to do something, which is what? Make your money grow at an X amount of percentage at for a certain period of time, and that result will happen. So I hope you get the contradiction that we are talking about. Belief is required because without belief you won't do something. But whether you believe this or not, this is factually true. Just like the sun rises on the east, right? This is how money will grow. All right. Now, what are your questions? One of your questions is, where do I get 30%? Correct? Where do I get 20% and that too consistently for the next 20, 30 years, etc.? Yes or no? So let's answer that question and take it out of the way. Okay? So, one second. This is, I need to skip this because we won't have time for that today. So let's come to this slide. Okay. No PPF, no intraday trading and all of that. I have no intention of making you stock market traders who are going to die early with a heart attack with crores in your bank account. No way. Thank you very much. All right. Okay. This is a very simple chart. Can you all see the stock price chart on your screen? Please confirm so that I'm sure. Yeah? Okay, great. Oops, something is happening. I just needed that. Okay. Sorry about that. Okay. This is nothing except a set of stocks which have been selected for two very simple reasons. Number one, each of these stocks are amongst the leaders in their group of their business or their sector. Okay. These are stocks which are part of the index. So when you say an index, for those of you who are new to the markets, stocks which are in the index like the Sensex or the Nifty are there because they are the better stocks amongst the entire universe which is out there. So not to say that non-index stocks are bad, definitely not, but index stocks are definitely safer. All right. And it's much easier to track them, much easier to get information, research, data, etc. on an index stocks because there are a lot of research agencies which will be behind that. We'll get into those details later. So they are leaders in their respective sectors or in the top 2 or 3, and 2 they are in the index. 3, all right, uh, thank you for that, Ashwin. 3, it also are names of companies that you are familiar with, and these are names you have heard of. Even if you've never been in the stock market, you've heard of these names, correct? Right? Okay. So Ashwin's pointed out an important gap in this. I thank you for that, so I'll correct it right away. This is not for the last 7 years. This is on 1st of Jan from 2003 to 2009. All right, thank you. So that's fixed. red. Okay. Now, I've intentionally kept this only till 2009. I know that we are in 2015, but we'll come to that in a little while. What you have is two sets of numbers. So when it's ACC, 1st of January 2003, the price was 164 rupees. 1st January 2004, the stock price was 259 rupees. Alright? That means in 1 year, the blue number, the stock went up by 58% from 1st Jan 2003 to 1st Jan 2004. So if I look at, let's say, some other stock here, which is, let's say, this one, okay, Maruti 1st Jan 2006 was 645 rupees, Maruti 1st Jan 2007 was 969 rupees, it had gone up by 50% in 1 year. So are we clear about what these black numbers are and the blue numbers are? The black numbers are the stock price of the 1st January of that year. The blue number is how much it has changed from 1st Jan of the previous year to the 1st Jan of this year. Are we clear? Alright. Now, in 2008-9, as many of us know, is when the stock market crash came. And in that year, if you had invested in the 1st of Jan 2008, 1 year later you would have been losing 50%, 56%, 26%, 60% even in individual stocks. Alright? Are we clear about this? Now, the question we are trying to ask is, where am I going to get 20, 30, 40% per year? So, I want you to do a quick exercise, use your calculators also if you want. What is the average of the blue numbers that you see here? Can somebody just maybe put out a quick informed guess? What is the average of the blue numbers? Anybody? For those 7 years. What is the average of those blue numbers? We'll come to the present and the future in a little while. What's the average of the blue numbers? 30, maybe 40, maybe 50%. I don't know, depend on how you calculate it, depend on how you account for the negatives also. Right? But it is definitely over 30%. Alright? Take out your cals and calculate it on your own. Alright? So, your first question, where can I get 30%? Well, here is my answer. And you don't have to be an intraday trader. You don't have to be a derivatives trader for this. You don't have to go deep into all the technical indicators and fundamental analysis and this. If you do, there are advantages. I'm not saying it's not that you won't get better benefits from that. I'm saying you don't have to dive deep in to actually get the sort of results that the market has been giving us. Are we clear about this? You don't need some high funda software or subscriptions or any tools. You need a hell of a lot of common sense, which you all have, which I have, but none of us use. Okay? Alright. So, I'm sure there are some other questions you now have in your mind. Let me hear those questions. I want those questions. Say everything that is concerning you right now. While those questions come in, would somebody like to tell me what are the prices of these stocks today? How much is ACC today? So we are today on, what's the date today? 19th Feb 2015. Alright? Yeah. Okay. How much is ACC? Ravi is asking, is this after tax, after deduction? No tax, no deduction. This is just straight investing, long term. How much is ACC? How much is RIL? Alright, so ACC 1615. Thank you. Let's get all the numbers, please. Approximates is also fine. Don't have to be accurate. 900. Infi is how much? Come on, come on, come on. By the way, if you watch the recording later and watch this, then do it with those numbers at that time. Alright? Do it with numbers at that time and tell me. How much is, come on, tell me. Infi, Bharti, SBI, Maruti, ITC, L&T, Cipla. I want all the approximate numbers for this. what? Infi 2240, okay. Bharti 300, let's say. Airtel, okay, Bharti Airtel, SBI 370. No, how much is SBI? 300. Bharti is 370. Maruti, Cipla 680, okay. L&T 1650. ITC 380 approximately. Maruti about 3700. Okay. These are the prices, and like I said, if you do this exercise later, please do it with a set of stocks you yourself have selected. Don't have to follow these stocks, alright? And do it at the time of whenever you're doing this, 6 months, 6 years, I don't care when you do it down the line. Now, this price that you have on the right here is 2009 price, correct? This is the 2009 price, and the price that we are seeing here is not the 2009 price, this is the 2015 price. So this is 6 years from now. Plus, like some of you have been saying, some of these stocks have given various what are called corporate actions. It's not just one, but many stocks that have given corporate actions, right? So let's look at sorry, this is what some of the stocks are. ACC, as far as I know, no corporate action from 2009 to now. Reliance gave a bonus. So actually, if you adjust for the bonus 1:1, I think, then the stock price is 1800 today. In 2009, Reliance was 1250, but you take the bonus and adjust backwards, then it's 1800. Infosys had a bonus just 2 months back, right? And if you convert it back, it's 4400. It is 1100 in 2000. That means it's gone up 4 times in 6 years. Bharti did a split. I think it was a 1:5 split last year or 2 years back. State Bank of India just a month back did a 1:10 split. So State Bank of India, which was 1300, you can split that and say that was 131 rupees then, that is now 300 rupees, almost 2.5 times up. Maruti has done nothing, but Maruti in 2009 was 549 rupees and now it is 3700 rupees. ITC did a bonus, it was 171 rupees in 2009, it is now 380 rupees. If you take the bonus and do 170 divide by 2, it becomes 80 rupees. Stock has become 380 rupees stock today. L&T gave a bonus, 1:1 bonus. It was 800 rupees in 2009. If you adjust for the bonus that was given last year, that's 400 rupees stock, which has become 1650 rupees. And Cipla, I don't know if any corporate action happened, but 190 rupees stock is 680 rupees today. Right? These are today's approximate prices. All right? Are we so far so good? Are we so far so good? Any questions? Because every part from here on is really, really important. So I want us all to be on the same boat on this. Any questions? I need a yes, no. All right. Okay. Good. Now, here are 3 scenarios that I'm going to draw out. 3 scenarios. Number 1, you had bought stocks in 2003 or 4 or 5 or even 6 and sorry, all right, and you were holding these stocks today without selling them in between the 2008-9 global crash, which caused a 50% reduction in the global markets, came and has now gone. It's a long history. Some of us don't even know what I'm talking about. All right. So this is one thing that you could have done. All right. Next. So I hope you're with me. Just, let me know if I'm losing you. 2, you bought stocks in so the first one basically is you bought stocks and you kept holding them. My question to you is, if you were doing scenario 1, would you still be making a lot of money? over the last 10 years, in spite of the once in 100-year stock market fall, would you be making a lot of money? Percentages you can calculate on your own later, but would you be making a lot of money, yes or no? Some more answers, please. And those of you who watch the recording, please think about it. Take out your calculators, take out an Excel sheet. Fine. If you don't know, take out an Excel sheet. I'm saying very simple question, Ravi. I'm saying if you had bought any of these stocks in 2003, 4, 5, 6, at these prices that you see here on the screen, and these are public prices, you know that. And if you're still holding these stocks today, would you be making a meaningful amount of money? That is the question. Right? With these prices today, these are public information, right? You'd definitely be making a lot of money. Next scenario, you bought stocks in 2008. Okay? 1 year later, what would be your state? Tell me. 1 year later, what would be your state? You would be 50-60% down on your portfolio. If you put 1 lakh, you'd be 50% down. Alright? Yeah, so you guys are saying, Rizwan is saying loss, Abhishek is saying negative and all of that. I really want some more honest answers. Right? Okay, nice to say in retrospect, instead of selling, keep buying at lower prices. Okay, but I'm asking you, 1 year later, suppose you had bought stocks at the peak of 2008, which actually, by the way, a lot of retail people did. And then 1 year later, what would be your state of your life? You know what? I'm not talking about the loss. Obviously, it's a loss. Alright? You would be cursing. You would be cursing everybody who got you into the stock market. Right? You would be like, why did I make this mistake? My parents told me not to buy. My friends told me it's a scam. I should have known better. And you know what? Who you will be remembering the most? Guess who you will be remembering the most? You will be remembering God. You will be visiting temples and mosques and churches and saying, God, please get me out of this mess once in my life. And I promise you I'm never going to make this blunder again. If you don't know what I'm talking about, then you haven't had a loss that has really, really devastated you or has given you sleepless nights. It's easy to say this when you have not gone through it. Any of you who went through the crisis of 2008-9 know what I'm talking about. The rest of you, I promise you, you do not know what I'm talking about. I'm not talking about intellectual answers here. I'm talking about your emotional state. I'm talking about your ability to think straight. You have a 50-60% loss, and you know what, and I'm not talking about playing small here. If you have invested 10,000 rupees and you lost 5,000 rupees, for many of you it would be like, okay, fine, you'll forget it in a week. I'm not talking about that. I'm talking about if you had invested a crore and you lost 50 lakhs. If you had invested 10 lakhs and you lost 5 lakhs, what would your life be? What all thoughts would you be having? What would your family, your husband be telling you? How would you look at yourself in the mirror? What answers will you want to give to yourself, to your children, to your family? Not that they will know. You may probably not doing it without telling them. But what is your state of life? Are you with me on this? Alright? Because you can go and watch YouTube channels, and you know what the TV channels were doing in 2008, Jan? Go watch. And if you watch, they were cutting cake. They were saying Sensex will go to 20,000, 30,000, 40,000, 60,000. They were, wearing cartoon those balloons. They were having that in the studios. They were throwing snow. It was like one party. India, we are just arrived to the global stage. Just watch, the bull market has just started. Do you remember what I'm saying, some of you? Invest now. This is the best time. And then what happened? At that time, we did not know about CDO. We did not know about asset bubble. We did not know about junk loans. We did not know about ninja loans. We didn't know anything about that. But we were on top of the world. Heaven was going to come to earth. That was how things were portrayed by the media, and you and I were listening to this media. Yes or no? I'm not talking about the financial loss. I'm talking about your life. If you had done that in 2008, right, today you can look back and say, yeah, it was a bad dream. But I'm asking you how you would have been at that time. All right? Now, let's come to a third scenario. And you know what the third scenario is? If you had bought stocks in 2003, 4, 5, 6. Yeah, it was weird. Absolutely. It was really weird. Okay? If you had bought stocks in this time, oh, by the way, if you want any data, you should go and look at how many demat accounts were closed in the first 3 months, 6 months after the 2008 crash happened. How many demat accounts were opened in the last half of 2008, and how many of those accounts were closed in the first half of 2009? Sorry, actually I said that wrong. How many accounts, demat accounts and trading accounts were opened in the second half of 2007? All right. And how many of those accounts were closed in the first half of 2008? Go and verify this for yourself. It's public data. It's a little hard to find, but go find it. Convince yourself. And who opens those sort of demat accounts? Do you think it's the HNIs or the institutions or the hedge funds? And no, of course not. They need one account. That's enough. It is the millions of retail guys who went like rats, get like falling Pete Piper, right? And then when they saw the money go down, some of them jumped out and some of them jumped off their flat. That's what happened in 2008. All right. Now, let's look at scenario 3. Scenario 3 is this. If you had bought stocks in 2003, 4, 5, 6 and you sold in Jan of 2008, sat on cash, all right, for 1 year and bought the same stocks again in Jan 2009 and you were holding them today, then what? Are you with me? Are we clear about all the 3 scenarios here? Let me just put them on one sheet. That would have been a fortune today, is what Deen Dayal says. Absolutely true. Any of you disagree? If you had bought stocks at these prices here, all right, if you had sold them in the 2008 peak prices here, and you bought the same stocks at these prices at half the price, that means you would have bought double the quantity, all right? And then what did you do after that? You were still holding the stocks and those stocks were at this price today. The price at 495 you bought has become 1615, 1254 has become 900 but gave you a bonus, etc., etc., etc. That would definitely be a fortune. Now, do you think that would be 30% or not per year? And by the way, I'm not talking about day trading. I'm not talking about derivatives. I'm just talking about sitting on your spot portfolio in your demat account. If you had done this, would you be getting 30% per year or not? That's my question to all of you. Yep. Anyone has a doubt, please tell me. If you have a doubt that by doing what I have said here in the third scenario, if you'd get less than 30% per year, I want to hear that now. And if you have a doubt, if any of you are watching this recording, all right, and you have a doubt, I want you to get in touch with me. Rajesh is saying you will not get 10% GDP rate of growth all the time. Of course not, you're not going to get, all right? But you know what? What the GDP rate of growth in 2003? What was it in 2004? What was it in 2005? Was it 10%? Definitely not. We didn't even do 10% once. We did 8% for 2 years. We are now at 5 or 6% today. All right? I don't care. I don't want 10% GDP growth. I'm just looking for whatever growth that happens. I'm looking at the stock market. I'm saying even if the economy grows at 6%, which is probably what it did on an average, take the average GDP growth from 2003 to 2015. 10% is an aberration. 8% was also an aberration. We probably did 6% on an average, 7% at best. Tell me, Rajesh, if I'm wrong. I really would like to be refuted on this, because you know what, my future is depending on a lot of what I'm saying right now. My financial future, my family's future, whether I'm going to have a great life or not, is fully dependent on exactly what I'm discussing today. So if anybody has something that can destroy my argument, I really would love to hear it, and I will pay you for it. Honestly, sincerely, from the heart. All right? Okay. So now we are talking about ISIS, and we are talking about global factors. We can talk about Europe. We can talk about Japan. Okay, fine. We are going to cover all that. Don't worry. All that we will talk about. Rajesh is talking about land bank. Where is the question of land bank in this, Rajesh? There's no land bank in this. This is a stock. This is the price of stock market, right? This is based on earnings. This is based on assets, right? So all that will come and go. In the last 15 years, it's going to be a different future in the future. In the future, you can't expect price to go up on the base of land prices going up. Definitely not. Okay? So, you know what? We're going to deal with all your concerns and all your questions. I promise to answer them. And if I don't know the answer, I'll tell you I don't know the answer. All right? I'm just going to be frank about it. And you can challenge me on anything that I'm saying. And I will say what I know. I don't know everything, that is for sure. But I'll say what I know, and I'll say it on the basis of the data and fact that I have, which is in the public domain. I don't have anything in secret. I don't have anything that is, mysterious, etc. Okay? So, now, here's the other question. I hope we all agree that if we had done what we have said here in point 3, then we could really make a lot of money. Agreed? Now, what if, and listen to this very carefully, right? What if you could have analyzed public domain data from official websites, and this public domain data is free? It is absolutely free, and you from that data could infer that this price was unsustainable of 2008, and that was the time to sell. All right? And on the basis of the very same data 1 year later, on the basis of the very same data 1 year later, from a public domain website, from an authentic official website, if that same data told you that this was the price to buy. Now I know in retrospect it's all great and stuff like that, but you know what, those of you interested, come, I'll show you the data. All right? If you knew on the basis of same data that this was the price to buy and you had bought at that time, would that be great or not? Right? So Abhishek is saying is brilliant. Well, Abhishek, that's exactly what I'm talking about. Right? You can call it value investing, fundamental investing, PE, or whatever it is, but this is public information. My question is, how many of you know this? How many people in the public know this? And all this does not require you to be a trader or anything like that. I'm talking about long-term investing here. And if you can get your 30%, and if you have 1 lakh and become 2.37 crores, is it worth it or not worth it? Sorry, not 2.37 crores, 26 crores. 26 crores. Is it worth it or is it not worth it? That's the question you have to ask yourself. Alright? So, what are we talking about? We are talking about, where did that go? Sorry. We are talking about this. If you could learn to do this, then what does it mean for your life? The question we started out with is, where is 30% available? You know what? 30% is available, but it's not like a fixed deposit. You just put it in and sleep over it for the next 10 years, you're going to get 30%. That will not happen. You're going to have to be proactive. You're going to have to review the economic environment. You're going to have to understand how the world of money works, the world of financial stocks works, and you're going to have to make appropriate decisions about when to be in the stock market, when to be sitting on cash or on a fixed deposit, and then when to get back into the stock market. This is definitely not a case where you can say, I will leave my money for 30 years and I will make 30%. No, 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 no. That, my friends, is not going to happen. Alright? So you're going to have to be proactive. And when I mean proactive, what do I mean? If you're willing to spend even just one full day per quarter, one full day per quarter every 3 months, and review your portfolio in depth and re-evaluate, sell what is not good, buy what is good, and then review the re-evaluation again after 3 months, I'm telling you 30% is happening. Yes, you want to be a trader, you want to do derivatives, you want to do shorting, you want to do FNO, you want to do intraday and all of that, but you know what? Here's my takeaway for this. If you want to do all that and put in that much extra time, effort, stress, knowledge, all that, then you better be making a lot more than 30% per year. If you're not making more than 30% per year, doing all that extra work, then my question is, how is it worth it? Is it worth it to take on the stress, to take on that effort? And then let's say 15% or 20%. I'm saying 30% is, in a sense, not a minimum, but a good benchmark to deal with. And I'm saying on the basis of fact. Okay? Now, so far we've discussed something, and I want you to guess what that something is. But that's actually only guidelines and what would I say, pointers to something. But what is something? What is the stuff that we really need to know about? What do we really need to know? Can someone tell me? Anyone? What's the real question? I'm not talking about techniques, I'm not talking about strategy, I'm talking about what do we really need to know? Anyone? So the question is, what do we really need to know about something in order for you to actually step into this? So some people are saying timing, when to invest, where to invest, okay, put it all together and have a platform, do systematic, some are saying technical analysis, now somebody will say fundamental analysis, right? We need to know about human nature. Okay, fine. Anything else? Ashwin is asking if it's so easy, why no mutual fund has returned 30% over a long period? Well, I can get into a lot of reasons for that. All right, but you know, mutual funds invest with their one hand tied. If you look at the regulatory guidelines, a lot of the mutual funds can't be sitting on cash. All right, the fund is approved by SEBI and has to operate within a certain set of constraints and parameters. Some of those parameters, for example, are that you have to be at least 70% invested into stocks at all time for an equity fund. Now, if you force the fund to be invested even when the market is going down, how are you going to get, you know, great returns? You're going to get subpar returns. It's a regulatory issue which is there, right? So, what do we really need to know? By the way, other thing about mutual funds, you know, they exist to make money for their owners. We are talking here about making money for ourselves. If you're going to depend on a third party out there, you really have to ask yourself the question, why is that person giving you free advice? Right? Let's go back to the life insurance thing. It's something we didn't mention. What do you think the life insurance agent makes there? Why does he sell you only endowment or ULIP or money back and not term? We'll talk about that later. Think about it. Did you pay the life insurance agent money to get advice? What's in it for him that he's coming to your office? For commission, correct, absolutely, but how much commission? How much commission? Do you know? Do you know that the commission can easily be 30% of the first year? Then it becomes 20% of the second year, then 10% for the third year, and then 2% every year after that for the next 17 years. You add it up, it comes to 94%. Doesn't matter what he sells you, almost. Tell me, if you were in his shoes and you had a family, you had a future, what would you sell? There is an inherent conflict of interest in the system, my friends. And if we don't take care of our own future, nobody is going to take care of our future for us. You have to understand that there is no free lunch. SMS tips, TV advice, newspapers, all designed to make things overly simple, make it look easy, get you to trade. The broker makes his brokerage, you make a loss. That's not the way the game is played. Right? You have to take charge and you have to be responsible. It is your money, it is your future. Alright? Okay, so that was a small digression. What do we really need to know? What do we really need to know? Okay, you know the answer I'm looking for? Everything that we have discussed so far is about the past. All this discussion 2003 to 2009 and then these prices here till this is all about the past or the present. What do we really need to know? Tell me, what do we really need to know? We need to know about, right, the future. Exactly. Right? Now, can the future be guaranteed? Definitely not. But what is the potential for growth? Yes, Rizwan, that's one question. How much could the market go up by? What is in store? Is that a guarantee? Absolutely not. Are there challenges? Absolutely yes. Right? What about the future? What is likely? There are no guarantees. What are the challenges? What levels could we go up to? Right? By when could this happen? Etc. 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 And you know what? You have to take risk. There is no choice about it. Without that, you and I are going nowhere. So, how about we answer these questions now? Would that be interesting? Alright? Would that be interesting? So you know what? This is my question actually. The Sensex is at 29,000 something today. Alright? 19th Feb 2015. Where is the Sensex likely to be in Jan 2020? Where is the Sensex likely to be in Jan 2030? Are these interesting questions? Are these relevant questions? And if we could get an answer to this on the basis of fact, because everybody has an opinion, and you know what, opinions everybody has a right to, it's fine. I'm talking on the basis of fact, on the basis of data. Would that be great? Would that be useful? That's my question. Alright? So I'm going to do something here. You know what? Let's take a 5-minute break, because I really want you to be fresh, and I really want you to be attentive, and I really want you to, pay the best attention you can for the rest of the session, because we are taking a call on what is possible, and then you might have to make a call on what you want to do with your money and your future. Alright? So I'm going to stop the session here for 5 minutes. Go freshen yourself, get a cup of tea, wash your face, do what you have to, and then come back. And if you're watching the recording, pause here, go freshen up. We've already been in this for about 2 hours. Take a 5-minute break and come back. All right? Good. Okay, so the question was that about Warren Buffett saying apparently that equity will not give more than 15% annualized over the next 20 years. I don't know about that, but I can tell you a few things. A lot of people misunderstand what Warren Buffett is doing. I would strongly suggest that anyone interested in really understanding what Warren Buffett is doing, read his autobiography called The Snowball. All right. It's a really insightful book and will change a lot of your opinions about what Warren Buffett is up to. The problem is that the world has put him on a great big pedestal and oversimplified greatly what that man is up to. The man is a genius, and you and I have zero understanding of exactly what he's doing. We talked about him about a value investor, moat, this, that. No. That's not what he's about. He's about something much more profound, significant. Please read his book. Not his book actually, but authorized biography. The Snowball, it is 800 pages. It's an amazing insight into what that man is actually about. All right. Right. So, we were talking about knowing what potentially the future could be about. All right. So, to answer that question for us, I'm going to bring up our Sensex. Okay. Can you see the chart? This is the entire history of the Sensex on a weekly chart right from 1979. Can you please confirm that you see the Sensex? All of you? Okay, great. So let's analyze this. This is the Sensex right from 1979. It has been updated till today. Every day's data is on this chart that you are seeing, right? So even before we get into talking about the future, let's a little look at what is on this chart. You're talking about how many years of India's passed on this from 1979 to 2015. You're talking about how many years? 36 years of India's existence is on this chart. And before we go ahead, a couple of things that we need to understand when we talk about an index. All right? What is an index and what is the significance of an index? An index is not something which is, just one number which is randomly created. All right? So first of all, the Sensex has 30 stocks. Each of those 30 are the majority market, how do I say this? Help me with this. They are almost monopolies. If not monopolies, they have the largest market share of their respective industries. All right? Which means, you know what? If that industry is doing well, these guys are really doing well, right? So if the auto industry is growing, Maruti is doing really well. If the cement industry is doing, ACC is doing really well. If the pharma industry is growing, then Sun Pharma is doing really, really well. Why? Because they are already the biggest of the bigger ones out there, all right? So this is that. Next, it has a diverse set of stocks. These are not only from a industry, but from everything: automobiles, pharmaceuticals, IT, banks, agriculture, services, name it, and they're represented there. In other words, it reflects the economic reality of India. And you have to understand this last statement. Let me change this. I'm talking about not an index. I'm talking about the Sensex. That is what we are talking about here. Are we on the same page here? You really need to understand what the Sensex is about. In other words, the Sensex is a very reliable indicator of what the state of, not the economy, but not just the economy, but the sentiment and the expectations and the feelings of the people are at that given point in time. It reflects, right, economic reality, all right, political reality, right, social reality. It reflects the hopes and fears of all involved. Who do I mean by all? All the market participants. The FIIs, the domestic guys, the brokers, right? Everybody's. It reflects economy, politics, social reality. It reflects weather, terrorism, everything. Are you with me on this? All these factors are taken into account when the Sensex gives out a number. Now it's not like somebody is sitting and calculating this thing and all. No. Ultimately the Sensex only takes the stock price and what is called the free float of that stock, does some very simple mathematics at the back end. If you want the details, go to the NSE website or the BSE website and there'll be some details. But the point is, all these tangible and intangible factors, somebody was talking about land bank, that is included. Earnings, that is included. Bankruptcy, that is included. Scams, that is included. Okay? Everything is included. Asset prices, all right, earnings, everything is included and factored into a main index. Are we clear about this? This is an important point to appreciate. If you have any questions, please feel free to ask anything you have on this issue. Okay? So what is it? In India we're talking about the Sensex. For that you could talk about any country. You could talk about the Nikkei, you could talk about the Dow Jones, the FTSE, the Bovespa, the Shanghai Index. It doesn't matter. The main index of any country or the stock exchange, the main stock exchange there, and the main index of that is a reflection of that economies, that geographies, that country's overall state of affairs. All things taken into account. Are we clear? All right? That's why markets will go up. That's why markets will go down. All right, it's not only just 2009, Rajesh, it is 1939, the global depression, and it is the new life high that we are making today as we speak. Everything is included in this. Are we clear about this? Does anyone have any doubts, any questions? All right, so you know what? Right from 1979 till today, 2015, the data is here. Now, in the last 36 years of this country, what all has happened in this country? Just randomly tell me. Randomly tell me what all has happened. So think about what I'm going to say. In the 1970s and 80s and even till the mid 90s, you and I did not know what a mobile was, what a mall was, what a toll gate was. Luxury bus meant a wooden bench with a cushion on it. Alright? You remember there was something called Doordarshan, Wednesday, Chitrahar, that was the only thing. 10 o'clock morning, Sunday, Ramayana, that was the only thing. The whole country shut down. Right? A national highway meant 1.5 lanes, and who will get off the road was the question when you had to overtake. Alright? In the 80s and 90s, you almost had alternate years. You had flood and then famine in Bihar, alternate years. In the 1980s and 80s, and even up to mid 90s, if we grew at 4% GDP per year, we were damn happy. It was the license Raj. Who inherited the scooter in your family? Who inherited the Padmini and the ambassador? Those who are less than 20 years are wondering what is Padmini and what is ambassador. Well, they should Google and find out. There were the only two cars that were available in India at that time. If you remember, you had to stand in an STD booth after 10 o'clock to get the 1/4 STD rate. You waited 10 years to get a gas connection. That was the India. You did not know what a computer was. You did not know what a laptop was. Holidays meant going back to the village, going back to grandparents, sleeping whole day or playing the whole night. getting into the fields, eating dosas. What was fried food? What was fast food? Nobody knew. That was the India that we are talking about. In this 35 years, you've had NDA, you have had UPA. You've had Vajpayee who has come, you've had Indira Gandhi who has been there. You've had two prime ministers who've been assassinated, Indira Gandhi and Rajiv Gandhi. Alright? You've had the time when Russia was our biggest friend and biggest ally in the 80s and even up to 90s, and now America is our biggest friend and our biggest ally. We had a time in this country in the last 36 years where Rajiv Gandhi sent out the last few tons of gold that we had, and he was called a traitor because we had only 2 weeks of foreign exchange. Today, we have $330 billion of foreign exchange and we are lending money to global institutions. Alright? We've had 9/11 come and go, 26/11 come and go, we've had Kargil which has come and gone, we've had Mandal Commission, we've had VP Singh, we've had Ketan Parekh, we've had Harshad Mehta. We've had all the stuff you can think about here. Okay? We've had, okay, Gregory wants to add nuclear ban on India. Sure, go ahead. We've not maybe come to war, but we've come to a lot of skirmishes with China in northeast India. Right? We've had Sri Lanka till last year becoming very, very friendly with China. Right? We've had a lot of things. Okay? Now, in 1979, the Sensex was 118. Okay? In 1979, the Sensex was 118. If at that time, and by the way, how many of you were already 20 years old in 1979 here? I would like to know. How many of you watching this recording? If you do, I want to know if you have any recollection of what 1979, 1980 in India was. I don't think most of us know. In 1979, if somebody told you the Sensex is at 117, it will go to 1000, would you have believed it? Tell me. Quick answers. Let's really, hasten the pace here now. Somebody told you Sensex is at 117, it will go to 1000. Would you have believed it? I don't think so. Most of us would not have. They said, what is this? There was no internet trading, by the way. You remember, it was all on the paper. You had to have a share transfer certificate. You had to do all that manually. The richest person in India was the post office of India because the shares were all going up and down the country. The share certificates rather. Now, 1979, Sensex is 118. 1980, it is 142. And you're saying, yeah, 1000, I told you 1000 will not happen. Okay. By 1982, 3 years later, it is 229. And you're like, 3 years, where is 1000 going to happen? Definitely not. Now, even by the time it is 1984, it is 250. Barely doubled. If you put your money in a fixed deposit at that time, some of you will remember that you could have gotten 15% interest in NSE certificate in the Government of India Post Office. Do you remember that? And your money would have probably grown better there. So 5 years later, the money has hardly doubled. Now if somebody tells you, don't worry, it's going to come, 1000 on the Sensex is going to come, are you going to believe it? You have every reason to disbelieve it. 1986, we are at 570. The Sensex has almost doubled. Now, from 86 to 88, it goes to 500. From where? From almost 600, 598, 600, it goes to 500. That means you've lost about 15% of your money. Sensex at 1000? No way. Who are you kidding? I'm a smart person. Alright, okay. 1988, almost 10 years have gone. We are now in 1989. Remember we started in 1979. 10 years have gone and the Sensex is at 700. Where is 1000? But now maybe you're starting to think it is possible, but 10 years have gone past. 1990, we are at 1300. We are at 1300. Okay, 1000 came. It took 14, 15 years to come. In other words, your money would have grown 8 times if you had just put your money in Sensex stocks and left it. In spite of all these ups and downs, 1300. Now somebody tells you Sensex is going to 5,000. Are you going to believe it? Some of us may, most of us will still be skeptical. And then from 1990 at 1,400 almost, in 1991, it is at 1,100. 30% gone, 25% gone. I told you, no sense. Markets are all gambling. Isn't that what's your opinion about markets? Go and ask your friends and relatives and family. Stock markets, good place to be in or bad place to be in? Is it good investing or foolish investing? Is it intelligent or is it only for people who are high risk and aggressive? Go look at what the public myths are. It's changing now. I admit it's changing, but still it's got a very, very long way to go. Right? Right. A lot of you, I'm sure some of you who are in the stock markets or are planning to get into the stock markets would have been actively discouraged by your family and friends. Yes or no? They said, why are you doing this? You're going to lose. Correct? And even whatever you are investing is actually just pocket money, some 5,000, 10,000, 30,000, 1 lakh, 2 lakh. You're not investing large amounts of your money in the markets. Large amounts of money is stuck in some real estate or some gold. Anyhow, we'll come back to that. We were talking about Sensex at 5,000. Where is Sensex at 1,100? Where is Sensex at 5,000? Okay, we are in 1991. In 1992, the Sensex is at 3,800. In 2 years, it has tripled. In 2 years, the Sensex has tripled. Okay. Now you're thinking, oh, 5,000 may come. I better invest. I missed the last boat. Already market's gone up so much, it will probably go up more. This is the typical attitude of a retail investor. And then comes the crash. From 3,000 odd, 3,700, it comes to 2,000. 50% on, 40% gone. And again it goes back to 4,494. In 96 it's back to 2,900. In 97 it is at 4,000. In 98 it is at 3,000. 5,000? No way. Almost 10 years. The market has gone sideways. No point putting your money in the stock market, correct? This was the time liberalization was happening at the policy level. And none, if you were alive in 1995, did you ever imagine what India has become today? Did you? Tell me honestly. It's very nice and easy to say things in retrospect. How many of us have regretted not buying some plot of land somewhere and saying, what will happen there? It is so far from the city. There's only Parthenium, only mosquitoes are there. There's no road and all. I'm not going to buy. Correct? And in 15 years, so much has changed. That land was, people are coming to your house and saying, please sir, please madam, buy. And you didn't. I didn't. My father didn't. We all have our stories, don't we? Because none of us, actually, I shouldn't say none of us, very few actually knew what could happen. Most of us were skeptical. Most of us were disillusioned. Most of us, the only thing we wanted to do was go to United States of America and get a job there, become an NRI. And today, we have NRIs coming back. We have foreign nationals coming to India to work. Who had foreseen this? Any of us? None of us. So for 10 years we get stuck. 5,000 doesn't happen, or it happens in 2000, and this was your dot-com boom, if you remember. I'm sure some of you here know what I'm talking about, the dot-com boom. Internet had become the rage. If you could start a website, people gave you $1 million, and the only thing that was being counted as a metric was eyeballs. How many people are visiting a website? Whether you're going to make money or not, nobody was bothered. Everybody was like, okay, now life is going to be easy. You're going to get milk online. Well, you still have to go to the shop. Even 15 years after that, you still have to go to the shop. It doesn't come online. Your vegetables don't come online. But at that time, those of you who were there, you know what I'm talking about as to how we felt that heaven was going to come on earth because of this new technology called the internet. Netscape. Remember all those things? Alright? And then the dot-com bust came. Oh, by the way, before the dot-com bust came, the dot-com boom, half of India wanted to go abroad for the Y2K project. because you got $50 per DM or something like that. Plus you're getting the Indian salary. You got to see the world. This is the first time in India that a generation of Indians went abroad and saw what the foreign world looks like. And then came back with all sorts of dreams in their eyes. And then the dot-com bust came. From 5,000, not even 5,000, just from 6,000 on the Sensex in 2000, November 2000, we fall all the way to 3,000. Half your money gone in 1 year, 2 years. This is your dot-com bust. Money has just disappeared. People have lost jobs. If you're an IT guy, you lost your job. If you graduated that year, you didn't get a job. How many of you here with me on this? If I'm saying anything wrong, if I'm saying anything out of line, if I'm saying anything that did not happen, please stop me, please correct me. After the Sensex goes from 6,000 to 3,000, and now somebody tells you Sensex will go to 10,000, what would you have said? And like somebody already mentioned, for 10 years it went sideways. Okay, it went sideways. You have 10 years of history to prove that it will not go up, correct? That's what you're saying. 10 years of history to prove it will not go up. But by this time, 2000, you also had 20 years of history to know that the Sensex was at once upon a time at 120 and it went to 6,000 also. And by this time, 2 prime ministers come and gone, NDA, UPA come and gone, Mandal come and gone. All that has happened. 9/11 has come and gone. Sure, it could happen for the next 10 years. Let it happen. I'm not saying it can't happen for the next 10 years. Sure, let it happen. Okay. Now, at this point in 2003, if somebody told you Sensex will go to 10,000, would you have believed it or not? I want an honest answer. If somebody had told you Sensex will go to 20,000, what would you have said? Most of you would have said, what nonsense. Alright? What madness are you saying? 10 years it did nothing. Going up, impossible. Correct? What Tamala is saying. Well, here is the fact for you. 2003 the Sensex was at 3,000. In 2008 the Sensex was at 20,000. It went up 7 times in 4 years. 7 times in 4 years. Think about it. After sleeping for 10 years, it went up 7 times in 4 years. What do you have to say about that, Rajesh? We can always look at the sad parts. We can always look at the great parts. The real thing is to get the balance that this can happen, that can also happen. And to know when to be in and when to be out. That is the real challenge. Okay? We went up 7 times. And this was after going up 7 times, right? Then we said, oh no, we missed the boat. 20,000, Sensex will go to 30,000, 40,000, 50,000. Isn't that what media said? Isn't that what we believed? And then what happened? The 2008 crash. By the way, this is the 2008 crash. What looked so big at that time is this much only. If you had invested in the Sensex in 1980 at 180 or 200 and it was 8,000 here or 9,000 here, you were still making 40 times more money. After one of the biggest global recessions in 100 years, you were still making 40 times more money over the last 20 years. The Sensex is 9,000 here after the crash. The Sensex was 120 here 20 years before. Now what? Some of you, I don't know if any of you here who lost your job in 2008, you're in the IT sector, but if you are not, you remember how it was very suddenly very shaky, and in a matter of 3 to 6 months, things that were very rosy became very scary. Correct? Rajesh is saying if you're wrong at the wrong time, it hurts. Of course it hurts. I totally agree. But if you get your timing right, then what? If you get your timing right and you make your money grow up 7 times in 4 years, then what? The thing is, this is not a game of luck. This is a game of intelligence. It's a question of knowing what to look for and knowing when to be in, when to be out. Here is a simple challenge I throw to all of you. Please go and do a Google search for company promoters selling their shares in the second half of 2007. Are you listening to me? Company promoters selling their shares in the second half of 2007, and go and do a similar Google search for company promoters buying their company shares in the first half of 2009. Go see what they were doing, what the smart money was doing. And I'm not talking about timing lows and highs. No, you can't time lows and highs. That's impossible, because these are all retrospective labels. But you can know when something is at a high zone, and you can know when something is at a low zone. Not the high, not the low, but at a zone that you can know. And you can do that through fundamental analysis, you can do that through technical analysis, you can do that through quantitative stuff, you can do that through multiple ways. Alright? Now, let's get back to this. In 2009, the Sensex is at 9,000. In 2008, it went to 8,800. And somebody tells you in 2008, the Sensex will go back to 22,000. Will you have believed it? Yes or no? The world is falling apart. Lehman Brothers has happened. A few years before that, 9/11 has happened. 26/11 has happened. Alright, talk about another potential Kargil. Crude oil went up in 2007 to $140, $150 a barrel. All that happened. Now somebody says Sensex will go back to 22,000. Would you have believed it or not? Okay, I don't know. Maybe you would. In retrospect, it's easy. In 2010, we were back to 20,000 on the Sensex. Okay, and then we did not cross that life high till 2014. Till 2014. And today we are here at 29,462, 19th of February 2015. This is an extremely brief history of the Sensex of India over the last 36 years. With all the good things, with all the bad things, with all these things that have happened. Do you agree? Do you disagree? You want to add something? You want to debate something? You want to, refute something? This is the time to do it. Anyone? Anything? Something you want to add, Rajesh? Okay. So, I hope everybody is on my page. This is the past. What do we really want to know? We want to know the future, right? Now, there are two lines I've put here. By the way, these lines have been there for the last 5 years on this chart. I have not moved them at all. There is this pink line, alright, that pink line and this green line which is there. They are called trend lines. Some of you who know what, if you ever done any charting in your life, you know what a trend line is. It just gives you the long-term trend of how a certain stock or an index behaves, or any parameter that you're interested in behaves over a long period of time. Alright? So these trend lines reflect the long-term multi-decade trend of India's Sensex. And you have to really understand. So first, what is the Sensex? Second, what is a trend line? Extremely important concepts with profound meaning and consequences. The pink line is the long-term 36-year trend line of India, which includes the 4% GDP growth, the 8% GDP growth, the Padmini era and the Ambassador era, to the Mercedes and the BMW era, to the ITI phone connection which you have to wait for 10 years, to an instant mobile phone, to the time when Doordarshan was the only channel and now you have 200 channels, don't know what to watch. This is the entire history. 2 prime ministers assassinated, all this, that's the pink line. Are you with me? The dot-com boom, the dot-com bust, the 2008 crash, all that is factored in. This is the best fit line. A trend line is just a best fit line, visually best fit. That's all. You don't have to do any extra maths on this. So, that is the 36-year history. The pink line is from 2001. Sorry, the green line is from 2002. After the dot-com bust, when in a sense in the early 2000s is when the policy changes that happened in the second half of 1990 took root in India, and India started to now grow at a much faster rate. Okay, this is when FIIs came in, this is when FDI came in. A lot of you having your jobs with all these multinational companies happened because of the reforms that happened in 1990 in this country. And because these companies came into India in the late 1990s, early 2000s, built all these beautiful campuses where you go and work. India opened up, and it opened up forever. We can't close down again now. Alright? And for me, that green line represents the new India, the reformed, the liberalized, the globalized India, where what happens in some other corner of the world affects us. Till then, we were not bothered. As long as we had our wheat and the Food Corporation of India and Doordarshan and Nukkad and all, we were happy. And got a government job where you sat on the same table for the next 20 years. That's all everybody's ambition was. Today, not happy. Every 2 years you want to jump a job. Every 5 years you want a new car. And now everybody wants a bungalow with a villa, with a skylight, with 5 car parks and all that stuff. Okay? So the green line is the new India. The pink line is the all India involved. Now, for the trend line, all you do is extrapolate it and look at where it could go into the future. So that's exactly what we are going to do. Alright? Before going on, I want to ask a very simple and important question. And the question is this: what will it take? Alright? What will it take for the pink or green trend line to be broken down? What will it take? I want an answer. What will it take for this trend line to be broken down? Anyone, please. I need some answers. Okay, so we have some quick answers that have come in. And what is that? The entire economy breaking down, the assassination of the current Prime Minister, the world economy turning into a global down, a war with the neighbors, again a financial meltdown in the world, nuclear conflict, right? All that is what is going to take for the Sensex. By the way, 2 prime ministers have been assassinated, alright, and still the Sensex didn't break down forever. 9/11 came and went, still the Sensex didn't break down forever. By the way, it's not just the Sensex. Please go and look at any global stock market. This is not unique to India. You and I are overly pessimistic about what happens. I challenge you to do the following. Find any place in the world which has been completely devastated for any reason, including nuclear war, Hiroshima and Nagasaki. Did Japan not recover? World War I and World War II. Did Europe not recover? Sri Lanka with LTTE, did Sri Lanka not recover? Africa, is it not growing? For those of you who go and read, Syria and Iraq, it's happening now, but you know what? It's not going to last forever. Maybe 5 more years, maybe 10 more years, but it will end. Like any crisis, it ends. Good times end, bad times also end. And if you have a long-term enough perspective, recovery inevitably happens. I challenge anyone to find one place where there's been a catastrophe and it has been permanently destroyed and it did not recover. Alright? Show me one place. Show me one place. Look at Myanmar. Under military rule for the last 30 years. Who said Pakistan never grew? Go and look at Pakistan GDP. Go and look at Pakistan GDP numbers. If you are telling me something, please back it up with numbers. I respect your opinions, I respect your subjective things. I want you to back up anything you say with data. Go and look at the World Bank report for any country. Forget about Pakistan. Go and look at the African countries. They are much worse than Pakistan. Are African countries not growing? In spite of the northern, the spring of Libya, of Egypt, of Tunisia, have those countries not recovered? Go and look at the stock indices. Nikkei, Ashwin is saying, yes, Nikkei is down from a 30-year perspective, but in the last 15 years, has it not gone up? It's now at a 15-year high, Nikkei. Alright? Now for whatever reason it is there. Right? And listen, look at something which is relevant to India. You need to find something which has India's like circumstances. Alright? So if you want to look for bad news, you can find the bad news. If you want to look only for good news, you can find only good news. I'm saying find balance. Alright? So we have ISIS, we have Syria, we have this, we have that, we have Ukraine which is going on. Alright? We have NATO expanding into the east. We have China building up a nuclear warship and aircraft carriers, seagoing. We have China talking about the South China Sea being there. We have a lot of things, but you know what? I'll show you worse that happened in the past and things have happened better. Now look, you don't have to share my optimism, alright? I'm just saying, I'm talking about fact. Ethiopia was a completely devastated country because of civil war and because of famine. And look at Ethiopia's GDP today. All the Indian multinational large conglomerates are there based in Ethiopia servicing Africa. Do you know that? Right? So here's my simple thing. I need you to find me one thing which has permanently been destroyed. I challenge you to do that. And not for me. Do it to convince yourself. So, all this, and I'm only focusing on the bad. I'm saying in spite of all the bad things you can think about, this is what India Sensex has done in the last 38 years. We've gone from 120 to 29,000. How many multiples is that? Somebody take a calculator and calculate 29,000 divided by 120. You've gone up 240 times. If you had put 1 lakh then, it would be 2.4 crores today. 35 years. That is, by the way, for all you skeptics, right? That was a time when after the 9/11, after the 2008 crash, also after that you would have made 240 times more money. Ashwini is saying, just for argument's sake, Nikkei was 26,000 in 1990, it is still 17,000 today. Absolutely, I totally agree. But are you comparing Japan with India? Are you comparing an old country with excessively old people, with not enough young people to grow the economy compared to young country? What's the average age of India's population? Do you know how much it is? It is 26 years old. The average Indian is 26 years old. I am way too old. Half of you here are too old. What's the average age of China? Chinese population is 36 years old. There's a very nice saying in the world of global finance. China will become old before it becomes wealthy. India will become wealthy before it becomes old. You know what? Let's not worry about India becoming like Japan. We'll take another 30-40 years to do that. If we are alive after 30-40 years, I will have a different session on how to make money out of a downwards market. We'll short the market. Why can't we short the market? Those of you who know how to short, no? And if you're talking about shorting, then it's not 30% a year, it's 30% guaranteed almost if you know how to do it, when to do it. And if you're smart about it, not foolish. I'm not talking about day trading here. Alright, so now we are talking about, did you see last week's or in the last 2 weeks, a lot of this headline news about India's GDP will now grow at a rate faster than the Chinese GDP. How many of you saw that news? Let's talk about some good things also, no? And how much if that happens, which is likely to happen. So fine, we have Modi, he's been talking a lot, but time for action has come. And I fully expect action to happen. Wait for the budget. And I'm saying there's a certain inherent growth in India. By the way, coming back to this chart here, in 1980, 1990, India grew because of foreign investing or for domestic reasons? Please answer that question. We grew domestically or because of foreign investment in the 1980s and 1990s? We grew domestic, right? Because of domestic factors. Even if we go back to growing at domestic factors in the next 10-20 years, then you have the pink trend line which is going up, not down, not going sideways, no? Let's go back to 5% GDP growth. It's fine with me. I'm okay with that. Alright? So, again we digress. Sorry. I keep doing that. You need to pull me back in sometimes. If you can see, can you see my cursor? Bottom right of the screen where I'm putting this is a number that will appear here. So wherever you see that, it's like it's 199.77. Can you see that now? on the bottom right. Let me use that highlighter. I'm talking about this zone, right? In this zone is where you're going to get numbers, right? What am I going to do? I'm just going to extrapolate and tell us this line is 1st of January 2020, 5 years from now, actually less than 5 years from now. Where is the Sensex likely to be in the 1st Jan 2020? By the way, just to emphasize one thing, the earlier we asked the question, what will it take to break down this line? Somebody said nuclear war. I totally agree. Another prime minister not getting elected, assassinated, I don't think it's going to break this line. Another 2008 type crisis is not going to break this line. You're going to need something much bigger. See, here's the point. Listen carefully. You need an event which is bigger than anything that has happened in the last 36 years to break this trend line. Are you with me? Do you understand that or you don't understand that? You need an event which is bigger than anything that has happened in the last 36 years to break this pink trend line. Are you with me or not? And if such an event happens, I promise you something, you will have much bigger problems to worry about in your life than what the stock market is doing. I'm 100% sure about that. Okay? Now, what's the chance of something like that happen? What's the chance of another nuclear war happening? You can't say zero, but is it something that we have to take seriously? I don't think so. You could have, one thing happening in Ukraine between US and Russia, but it will get resolved also. People know what the risk is and what the consequences could be. This is all grandstanding to make public posturing. Of course, a lot of things happening in the back end. I'm not saying no. But the chance of, you got to worry more about global warming. You've got to worry more about nationalism in India. You've got to worry more about the rich and the poor divide. Alright? You've got to worry more about those things than anything else. And none of these things are new. Right? You've got to worry about how technology is going to automate a lot of things, and then what are the challenges in providing jobs to so many millions and perhaps a billion people in the next 20, 30 years in this world. Those are the real challenges. And you know what? You go and look at the last 200, 300 years of history, things have been taken care of. I see no reason to believe that this time it's going to be different. I'm going by history only. So, are we now ready to look at what the Sensex could be on the basis of this discussion in January 2020? Rizwan is saying AAP. Okay, fine. What happened to nationalism? Yeah. AAP is just one small thing, and at least AAP is doing some good stuff. What happened to nationalism? In the whole of East India, nationalism is a big problem. What about CPI, CPIM, which were trying to take the country backwards? What about Mamata Banerjee and TMC? Why are we not talking about that? Right? I don't worry about AAP, but that's my opinion. And I respect yours that you worry about AAP. That's fine. Right? Fine, it's a positive thing. And if they clean up the system even by 10%, the GDP will become better. Right? So good. Sorry, I misinterpreted what you said, Rizwan. You are saying AAP is a positive progress. I think most of us agree on that. Okay. So, I want you to tell me what you think Sensex will be in 2020. Tell me. I want numbers. Jan 2020. Tell me numbers. We are at 29,000 odd today. Today, 19th Feb 2015. Sensex is at 29,000. Jan 2020. What do you think Sensex would be? So let's see. We've got Gregory saying 50,000, Deen Dayal saying 40,000, Gopi saying 33,000, Ashwin saying 55,000, Abhishek saying 35,000, Rizwan saying 75,000, Ravi saying 40,000, and Rajesh saying 30,000, Tamala saying 40,000. Alright, good, fine. These are your estimates, right? Well, let's look at what the line says. So you need to look here. Are you with me? Are you watching this bottom right square? I hope you can see it on your side of the screen. Yes? what is that number? Tell me, what is that number? It is 40,600 something. Alright? 40,000 Jan 2020. And that is the pink line or the green line? The pink line. In other words, as far as I am concerned, the way I interpret this is 40,000 is the worst case scenario on the Sensex by Jan 2020. And by the way, before Jan 2020, there will be one more general election in India. Then we'll see whether Modi comes back or not. He's already said, if you heard his first speech in the parliament, he said, 5 साल के बाद report card दिखाना है और 10 साल के साथ 10 साल के लिए इधर रहना है. Did he say that or not? First speech he gave in the parliament. So we'll see. Before that we'll have a general election. Before that we're going to have another US presidential election. Before that something will happen in Ukraine, something will happen in Syria, something will happen with ISIS. Alright? Some more tsunamis may happen somewhere. God knows. All that will happen. Don't worry. Okay? But in spite of all that, the line says 40,000 and this is the worst case scenario. That is the pink line. What about the pink? What about the green line? Suppose, as we all hope, India now starts to grow faster, better, less corrupt, more efficient, more FDI, more whatever, liberalization, more FII, more this, more that. What is the pink line? What is the green line saying, friends? If we go back to 7-8% GDP, then what about the green line? Somebody tell me the number. The green line is how much? It is 65,000. So your estimates were from 30K sorry, to 75K. Pink line was 40K. Green line is 65,000. This, in my opinion, is the realistic target for the Sensex. The realistic target. The pink line is the worst case scenario in my opinion. The green line is the realistic estimate of where the Sensex is likely to be. Is this making sense? Do you agree? Do you disagree? Because this has direct implications on our original thing about being free to dream, about whether you could look forward to a much better wealthy future or not. It has to come back to that ultimately, otherwise we are not here to do a PhD. Alright? Anybody disagrees? Only Tamala agrees. What's for the rest of you? Alright. Now, this is 2020. I want your estimates for Jan 2030. What is your estimate for Jan 2030? Quick. 2.5 lakhs. Are you serious? 3.5 lakhs. Ashwin, are you serious? 2 lakhs, Rizwan, are you serious? 15 years from now, alright? 15 years from now. 2 lakh plus, Rizwan says. Alright, rest of you, come on, yeah, there are more than 20 people here. Let's get some 20 answers. 1 lakh, Deen Dayal, alright. 1.7 lakhs, Krishna, alright. Alright. 60,000, Rajesh, alright. Okay. So let the chart tell us, right? Let the numbers speak for themselves. Okay. Please somebody tell me what the number is. What is the number for the pink line? 1.7, 1.8 lakhs. So for the pink line, the old India trend line, okay, at say 5% GDP, We are talking about 180, which is approximately how many times of what we are today? We are, let's say, just for ease of calculation, 30,000. Alright? 6 times. That means 1 lakh could become 6 lakhs. 1 lakh could become 6 lakhs. What about the green line? New India. At, I don't know, 7, 8, who knows? If there's a big fall, do the trend lines change? Yes, they will change, but I doubt there will be a big fall. That's what you have to worry about. And this is a trend line which has held for 36 years. So if it changes, we'll change it. Alright, fine. It's not a fixed number. I don't know the future for sure. There's no guarantee. If tomorrow something happens, a nuclear war happens, I'll change the line. And if tomorrow India starts growing by 10%, I'll make a steeper line. Right? So this is not a fixed opinion. This is something that you will update every week, every month, every quarter, every year as you go forward, and then change. You can't be stuck on old opinions and say this is what will happen. No, no, no. You have to take incoming information, new changes, dynamic changes, changes in the world, and update your view. Alright? Okay. So, what about the green line? Does anyone have an estimate on the green line? Somebody give me the answer. How much? How much? 4 lakhs. Alright? 4 lakhs on the Sensex 2030. Alright? 4 lakhs. We are at 30,000 today. How many multiples of what are we talking about? You're talking about your money growing 12 times. The Sensex growing 12 times on its own. Including, by the way, in the next 15 years, you can be rest assured there'll be at least 1 or 2 major global corrections and crashes like the one that happened in 2008. Definitely. There'll be some more wars that will break out. There'll be some more tsunamis and 9/11s that could happen. You can't rule that out at all. I am saying, in spite of all that, Sensex at 4 lakhs by 2030. What does that mean? Every 1 lakh could become 12 lakhs in the next 15 years. Do you have a question on this? Do you have a doubt on this? Do you believe this? Alright, for those of you who say yes, I want to know where your money is. Where's your money? In a fixed deposit, in cash, or is it in the market? By no means am I saying put your money all in the stock market. I'm not saying that. But I'm asking, out of your entire wealth, how much is in the market? How much is in wealth creation like this? I'm not talking about having fun for trade. Bank savings, yes, we know what that is doing, right? Fine, Gopi says 2% of his or her wealth is totally in the money, in the market. Why? Where is the 98%? You know what? If you look at the data in Europe, in Japan, in US, 60 to 70% of domestic savings, financial savings are in the stock market. In India, it's about 3% tops on an average. In spite of the 2008 crash, the Dow Jones is making life highs. Just in case, go and check. So those guys have actually made money while we are sitting in our fixed deposits, losing money. Alright? And somebody talked about inflation earlier. Well, is this growing faster than inflation or growing slower than inflation? And how is your bank deposit growing versus inflation? How is your fixed deposit growing versus inflation? Versus how is the stock market growing versus inflation? If you look at the long-term data, real wealth is created in the markets. Alright? So, if you believe this, what? This part, then what next for you now? We've come a long way. We've been here for almost 3 hours now. Really appreciate your patience and appreciate your commitment and appreciate your attention and appreciate your interaction. What next? What does this mean? Right? What does this mean for? By the way, 15 years will pass just like that, or it will take a long time for 15 years to pass? What does this mean for you? Your dreams. Forget your dreams at this point, alright? Your retirement. How many of you are going to get pension? Any of you going to get pension? Are you planning not to grow old? So whether you like it or not, you're going to grow old, right? So where is the money going to come from to support yourself when you're old? Think about it. What does it mean for your retirement? What does it mean for your kids and their future, their education, their well-being? What does it mean for your aspirations? You know, I have another 2 days of material that we can talk about. Alright? On financial planning, on retirement planning, about creating a great future for our children and doing it the smart way. Not working like donkeys, but doing it the smart way. Right? Knowing how to use the financial markets to our advantage. Since somebody talked about Warren Buffett before, you know, Warren Buffett also said, the market is there to serve you. The market is there to serve you. This is exactly my takeaway from that whole thing. If the market is going to go to 4,000, it's there to serve me. It's here there to create wealth for me. The thing is, it's not going to do that on its own. It's not going to take my 1 lakh. I have to go to it and I have to put it in at the right time, at the right place. And I have to also move out at the right time. The market doesn't care. It's completely indifferent and completely welcoming and at the same time completely cold. It comes and says, come play, do whatever you want here. Nobody's going to force you to buy. Nobody's going to force you to sell. You do whatever you want. And if you lose money, you can come back again anytime. Right? So, Rizwan is saying, I want to be at least 50 crores by 2020. Well, inshallah is what I can say. Depends on how much seed capital you have today, how you make that grow in the next 5 years, right? And how proactive and how committed you're going to be. And that applies for everyone. It's not just for him, it's for everyone. How seriously do you want to take this? By the way, let me say something on being serious. I openly challenge this. If anybody were to put 10% of their time and effort that they put in to get a degree, and I put in 10 years to get my MBBS and my MD, if I put 10% of that time, 1 year, 2 years max, in learning the markets deeply and understanding them in a really meaningful, profound way, I'll tell you this. If at the end of your salaried working life, by the time you retire, if you have say 1 crore savings, just knowing what to be doing with that 1 crore could make it 3 or 5 crores minimum without actually spending a day more at work. That is the power of this knowledge. You know what? Nobody taught us this, unfortunately. Nobody is teaching us how to manage our money. Everybody is teaching us how to get a better job, get a pay, go abroad, get a degree, earn more. But what to do with that earning? Nobody is teaching us. Nobody taught me. Nobody taught my father. Anybody taught you? Anybody? What did you do first time when you had to file an income tax return? If you know how to add, minus, plus and divide, you can do it yourself. Why were we clueless, Abhishek? Why did you have to go to a consultant? You know how to read English, right? What are you, an engineer, a doctor, a lawyer? What are you, a businessman? You do all that well. And you and I are incapable of filling some 20 boxes on income tax form. I mean, this is ridiculous, isn't it? Think about it, please. It's simple English. And we are clueless. How stupid does this get? I'm sorry, I have no intention of insulting anybody. But I'm just asking us to reflect on our situation. Right? So, what does this mean for us? Can you actually create wealth and work less? Can we actually have free time and more wealth? Can we have a better life? Can we provide a better security for our children, for our future, for our wives, for our husbands? That is the question that I pose to you today. You know what? India is going to do this whether you like it or not. Whether you invest your 1 lakh or not, whether you invest 1 rupee or not, alright? This is going to happen. What you see on the screen, this is going to happen. India is going to do this. India does not need you. India does not need me for this to happen. This shall happen. It's written almost in stone. The big guys, the insightful people, the people who look for the next 20 years know this already. That's why they're building businesses, investing crores, and not small money, thousands of crores. But here we are like, oh my God, I lost 500, I lost 50,000. Yeah, that's temporary loss. You did the stupid thing, a foolish thing, that's fine. You need to think bigger and look at what the potential is. This is what the potential is. What are you going to do with this? You know what? You just have to ride this wave. You don't make the Sensex go up. I don't make the Sensex go up or down. We are insignificant. You flow with the water, take and just sit in the boat and the water will take you where it goes. If as long as you're positioned in the right direction, it's fine. Yeah, the water is going down a cliff and you don't get out, then gone. You're dead. But once the river starts flowing again, and if you're not flowing with the river and standing on the banks and saying, oh my God, oh my God, oh my God, what's the river supposed to do? Start taking action. All right. So I really need to ask you, what does this mean for you, your retirement, your kids, your aspiration, your future? Think about it. See, if this money doesn't serve you and your life, then this whole session is meaningless. If you're making money for the sake of making money, then I really don't know what to say. That money, you and I are all working for money to do something better in our lives, and that's what I'm talking about. Let's have a better life. Here is the opportunity. India is going to grow for at least the next 20, 30 years, the way I look at it. When we become old, we'll have a different set of problems like Europe is having, like Japan is having. We will talk about it then. No, let's live till then first. You know what the real challenge is? The real challenge is not the next 30 years. The real challenge is this. All right, where did that go? Sorry. 1 second. Yeah. You know, you don't have to worry about the next 30 years. You know what you have to worry about? Anyone? Just make 30% this year. That's all. If you are alive next year, inshallah, then make 30% next year also. Just take 1 year at a time, 6 months at a time, 3 months at a time. Just do that. Our great country is going to do this. What are we doing? Don't worry about where the market will be in 2020. I don't know if I'll be alive in 2020. All I need to do is make 30% this year, then make sure that all my money makes 30% again the next year, blah, blah, blah. It's taken me way too long to get to this, what some people are calling simple. Well, you know, at the end of it, whatever you find simple today in life is because you went through a hell of a lot of circus, figuring it out, a complexity, stress, falling, losing, getting up again, and then it became simple for you. Think about anything you're competent and good at. It looks simple, but it's never simple. It requires a certain experience, faith, wisdom, losses, being beaten up by the market to come with it before you can have that conviction that this is really, really possible. So my job is very simple. I need to make my 30% for this year. That's all. If I do this, I am on track to make 26 crores, not 2.6 crores, 26 crores. By the way, if you are 20 years old, you know, in 30 years from now, you'll be 50 and your 1 lakh would be 26 crores. If you're much older like me and some of you are, then at least let's do it for our children, no? Let's do it for our children. Who else do we do this for? Fine, we will be 70 or 80. What's the point of, you know, at 70, 80 when you have dentures in your mouth, can't eat chicken and you need everything to be mashed and eaten. There's no point of having 26 crores at that time. But fine, what if we could provide that sort of stuff for our kids? What if our parents gave us this great wealth when we were 30 years old? Let me put some perspective to this. When you were when you were born, your parents didn't have 1 lakh, but they had 10,000 rupees. Suppose our parents had put 10,000 rupees when we were born in the Indian stock market and it gave us 30%. If they knew how to manage it, when you were 30 years old, you would have gotten not 26 crores, you would have got 2.6 crores. Please think about what I'm saying. If you were 30 years old and you got 2.6 crores when you were 30, what could you have done with it? If you got 2.6 crores today, and all that was required was a 10,000 rupee seed capital growing at 30%. I know I'm making it sound easy. It is not that easy, but I'm telling you it is entirely feasible. It is entirely feasible. If you're not convinced, then please ask. All right. So the question is again, what do you want to do with this information? I've sort of come to the end of the session. There's really nothing much more for me to say. All right. If you have any questions, please feel free to ask. I will end this in the next 10 minutes with any questions that we have to bring them up for now. The only intention of today's session was to demonstrate what our country is going to achieve, the path it has been on, the path it is likely to be on. Right? So my thing is to get more people interested, because I know it can make a big difference to our lives. I'm not saying we should become traders and investors and this, that, all that sort of stuff. I'm only saying if we can take in, if you want to become trader, investor, like I said, if you make a lot more on this, then good. Make a lot more than 30%, right? So, are there any questions? Are there any doubts about today's session? It was about 1 lakh becoming 2.37 crores. Actually, it was about 1 lakh becoming 26 crores as far as I'm concerned. There are a lot more layers on this. There's a lot more slides that I've just done maybe less than 10% of my slides. But if this is the message that we can take home, then that's fine. All right. We are going to wrap up. So if there are any questions, then great. Okay. So lastly, I just want to leave you with this. Go to BIC's website. All our courses are basically designed to deliver on this long-term opportunity that India has. Whether you do it through the spot market, whether you do it through trading, whether you do it through derivatives, whether you do it through, it doesn't matter. Those are all techniques. That's all splitting the hair. The bottom line is you need to make that X amount of money. All right? And there are various programs that we offer. Please have a look. There are many programs. I know it's not the best website, a very horribly designed website, but it's an honest website. So there are courses you will find here. There are more than a dozen courses. There are more which are in the pipeline, which are coming up this year. All right. Basically, the two courses that would be of interest to you, right, are investing in equity and equity next step. So I'm just going to take a few minutes to explain this, and those who would like to leave, feel free to do that. Right. I hope you've delivered on the promise of today and you left happy and informed. For those who want to stay for another 5 minutes, I'll explain this and we can close up. So investing in equity is a 2-day crash course, ideal for people who are absolutely new to the markets. All right. And if you are either new to the markets or you have already had some experience but you're not really sure about all your fundamentals, concepts, etc., then this is a good place to start, right? It's usually a Saturday, Sunday. We'll also be starting this course online at some time in the future. I have absolutely no clue when. And we start right from the basics. What are shares, types of shares, corporate actions? Earlier in the day, we talked about splits, bonus, what is that? How does it impact the stock price? All that stuff. Factors impacting stock prices, how to track them, where to get this information, who are the various market participants, the FIIs of this country, what are they doing, what are they buying, what are they selling. Then we'll do what is called fundamental analysis. Fundamental analysis is about, finding out which companies are doing well financially in a simple manner. You don't have to become a chartered accountant for that. I am not a chartered accountant. I'm a doctor basically, right? But if I can do this, then you can do this. Many of your engineers are much better at math than I am. So use that knowledge, and fundamental analysis will show you where to get verified, authentic, fundamental data for free on official websites. How to use that data and to use that for what is called fundamental investing. What are the different types of fundamental investing which is there. Then on the second day, we'll do what is called technical analysis, which is technical analysis is the study of stocks on the basis of charts. So what I did here was very simple, very basic technical analysis. There's a lot more to that. There are many theories in technical analysis, Doe theory, candlesticks, Elliott wave, point and figure, Gann, etc. All that we will do the core aspects of Doe theory and how to use that in interpreting stocks. Then We will look at your own psychology and how it impacts investing, its pitfalls and how to avoid them. Most importantly, how to create an investment and trading plan that fits for you. I do not believe in a prescriptive approach and saying you should do this. I don't know your life, only you know your life. All right? At the end of these 2 days, you will be very well grounded in being able to understand what you're listening on TV, what the newspapers are saying, and make an informed decision at least. You will not have all the tools. In 2 days, you can do only so much. All right? But you'll have the core language and skills and resources that you need to make an informed decision using those as an input. Right? So I hope that is something that you got. So this is a 2-day course. The next one is on 21st Feb and 22nd Feb. That's coming weekend. I will not mention the fees here because it will be recorded hopefully, and then the fees will get updated. So later on, I don't want confusion on this account. All right, go to the website, scroll down, the fees is there and keeps getting updated as and when required. The schedules get updated, the fees get updated, the content gets updated, everything gets updated. So this is the 2-day course. If you are looking for something really hands-on, then I invite you to look at this course. All right, this is the Equity Next Step course. This is our flagship course. This flagship course is designed for these 4 points. If you want to make investing and trading the financial markets an important income and wealth generating activity in your life, you aspire to generate several lakhs to many crores, and I'm not kidding about this. I hope I have proved that point to you in today's session. It's not going to happen overnight. Just because you do this course, you're not going to become a multimillionaire tomorrow. But if you can have the patience and if you can build the skill and you can build the experience over a period of time with a great foundation, then this is the course you could look at. Recognize that the science and art to wealth creation. It is not a purely algo mechanical approach. It is not a purely gambling approach. You have to make informed decisions. You have to take risks. There's nothing like guarantees. Once you understand that life itself is not a guarantee, that tomorrow you may not get up alive, and you really understand that not just as a communication but as something that you live, then you'll understand what taking risk actually means. And taking informed risk, not stupid risk, but informed risk. Most importantly, you're willing to invest the time and effort that requires to gain a body of knowledge. If these 4 things describes you, then consider Equity Next Step. This is our flagship course for people who are looking to make stock markets, equity investing a really good foundation. This is a 2-part course. Part 1 is a 5-weekend course. So these are the old dates. We just finished a batch a week or 2 back. All right. The first weekend is just essential concepts. When I say weekend, it's Saturday and Sunday, 9:30 in the morning till 5:30, 6:30 in the evening. Sorry, 6:37 in the evening. We'll discuss all of this in detail. And by the way, for this course, we ask you to bring a laptop. There's a Wi-Fi here. All right, we will do things hands-on practically from day one. You do not need to know anything basic in this at all. We will start from the basics, but it will require a lot of your attention and hard work to participate. So bring your laptop, and while I'm demonstrating things, do it on your system. Store the URL, store the internet resources, store those things so that you can use it for future reference. So we'll do all this in depth. Exchanges, indices, exchange traded funds. We will look at, for example, in indices, global, local, sector, how they are all correlated, why you need to know about them, and how to interpret them and make this investment decisions. For those of you who, I'm digressing a bit, we have a YouTube channel on which I hold Friday webinars and they are uploaded. Go have a look at it. I'll talk about that in a little while. So that's the first weekend. At the end of every class, you'll get exercises. Exercises for you to do. If you do those exercises, that's when the real questions will happen. That's when the doubts will happen. Come back, we'll answer that. Then we will go to the next step. The second weekend is fundamental analysis. Now, I don't want to take too much time here. You can click this and go to the separate page on fundamental analysis. And all that is covered in those 2 days in fundamental analysis is here. All right. What is FA? What is FA good for? What is it bad for? What does it tell you? What is the advantages, disadvantages? All these ratios you would have heard. We will do all of them practically. I am not in favor of theory at all. We will talk theory only to the extent that you need to know. And we will do this with latest data. So if this class was happening today, you do FA with today's latest data. We'll show you where to get it for free. All right. We will do all these things practically. Understand the concept, understand the ratios, way to get the data, download the data, interpret the data, and then how to invest on the basis of all that data. All this gets done in those 2 days. All right. So this is for fundamental analysis. And again, there will be exercises and homework to be done. how do things like corporate actions that we discussed here impact your fundamental analysis as they happen, right? We will take live examples. I'll show you where to get this information and how to use that information to actually make investment decisions. Then there are 2 weekends on technical analysis. Technical analysis, like I said again, is this analysis of the charts. There are many different types of charts, many different types of patterns. We will discuss that. All right. So, sorry, where did this go? Yeah. So, Doe theory, the strength is you would have heard of things like support and resistance. You would have heard of things like head and shoulders, this pattern, that pattern. Those come from Doe theory. We'll start right from the basics of Doe theory, the foundation of Doe theory, who created it, what is the philosophy behind it, and you know, Charles Doe, this name still lives on today, right? We will discuss that, and we'll do all the stuff on live charts. So we'll do all of this. This is another 2-day session, all right? Price action, support, resistance, reversal, investing and trading strategies based on Doe. What is Doe theory's strength? Doe theory's strength is good at telling you at what price to buy a stock, at what price to sell a stock. That's what it is really good at telling you. How far a stock could go up, how far a stock could go down. That's what it's good at telling you. It is not good at telling you when to do this, but it's very good at telling you what to do, at what level to do, and which stock to do. What candlesticks is good at, which is a 350-year-old theory from Japan, is it's very good at timing the market. Candlesticks is very good at telling you when to do something. It's not very good at telling you what to do. So if you combine the what from Doe theory and the when from candlesticks, you get a much better holistic idea about how the stock market is likely to behave. All right. So in candlesticks, we will cover all this. Right. I'm sure some of you have heard of these terminologies. What are they? And again, we will do it on live charts. We will do everything on the latest. We don't take historical stuff. That's all for learning. What is the chart saying today? And you will follow it up. And by the way, in this course, we've tied up with one of India's leading software providers for TA and FA, right? And you get the software free along with the data and the update free, all right? And for the 2 months of this course, you can do this without having to spend an extra rupee for tools, for software, for data, and we use that in our classes. So earlier we did not have this partnership. We were really happy to have it, and you can now therefore benefit from that partnership by actually getting all the tools, not just the knowledge, to actually do the exercises that we show you. All right. So putting all this together in candlesticks, then how do you combine TA with FA? We will discuss all of that. The last weekend is practical stuff. Types of orders, types of trading, you know, psychology, FIIs, all this, creating a goal, creating a plan that works for you. Not works for me, doesn't work for somebody else, it has to work for you, for your life, for your circumstances, for your risk appetite, for your level of mastery, etc. Then we will have a live session. By the way, I'm sure some of you have trading accounts. You know, everybody knows the buy and sell thing, but how many of you know what all a trading account can do? There are some of us in BIC who are actually now thinking of investing abroad globally, and that's a completely different level of investing, multi-asset, multi-exchange and all of that. So, you know, you come here and you're going to be exposed to a very different level of intense experience, which is grounded and no, you know, short-term shortcuts, SMS nonsense and all of that. We don't do any of that. So on the live session, so the practical stuff, types of orders, we're going to show you what all you can do with the trading account. There are so many tools which are already there. You don't need anything extra. But people are going around looking for things which are already under their nose, under their login ID password in your trading account. So we'll demonstrate all that in detail. We'll have a live session on a working day to show you live analysis, live trading, and find live opportunities. We did that the other day, and almost on every live trading session, somebody or the other makes money. Somebody also loses money, but inevitably net people make money, and we'll show you that stuff. All this is part 1. All right, this is where the teaching happens. This is where the learning happens. But you know what is really important in life? Really what is important in life is, you want to do successfully something big in life, what do you need? Does somebody have an answer? You want to be really great at something. You want to take that big step. You want to take a bold step forward in life. What do you need in life in order to do that? Can anybody give me an answer? Patience, perseverance, big money, knowledge. Okay, any other answers? You need to start. Yeah, agreed. Okay, so here's my thing. You know what? You need dreams, you need commitment, you need faith in you. Yeah. You know what? The biggest thing you need is confidence. You need to trust yourself. You need to know that you can do it. You need to have that confidence. And that is an internal confidence, not somebody and saying, yeah, yeah, you can do it, you're good. Nah, that's not the sort of confidence I'm talking about. Something that you have stepped into knowing that you are good. You do not need external validation. Do you get what I'm saying? And the only way that comes is by you experimenting, you stepping out, you falling, you making a fool of yourself, and then rising up again, learning those lessons, and then moving on. It does not come from a degree, it does not come from a certificate, it does not come from a photograph or some standing ovation that you get. It comes from deep inside. I know you know what I'm talking about. That's why in Equity Next Step we have part 2. You know what part 2 requires? I stop talking. This is where you start talking. You take a stock, you take an index anywhere in the world, anywhere in India. You do the research on what you learned in part 1. Do your own independent research. If you copy paste, we will know. I promise you we will know. Alright? And come and make a presentation. I want Ravi, I want Krishna, I want Gregory, I want Rizwan, I want Rakesh, I want everybody to come here and make a presentation. And at the end of the presentation, we want something like, I recommend that we buy this stock at this price. This is the target, this is the stop loss, and these are my reasons. And you know what? This will be an open session at BIC. Anybody and everybody in BIC will attend that session and they will grill you. They will ask you questions. Now, you know the sad fact, very few people actually take up this opportunity, but this is where the rubber meets the road. This is where your big money, your big dreams, your big future happens. You can do as many of these as you want. You can do it in BIC or you can do it online. The whole point of this session is for you to build your confidence. Without confidence, you're not going to play big. You're not going to invest at 10 lakhs, 1 crore. You're going to invest at 10,000, lose the 5,000 and say, okay, fine, bad deal. We want people to play big in an informed environment, not taking stupid risks, not taking unnecessary risks. If you could learn, and I promise you, anybody comes to the course and if I do not deliver in what I'm going to say next, I will give you your money back. You know what that promise is? Where did that go? Sorry. How would you, like we mentioned already, if you could learn that this was the time to sell, when this was the time to sell, and if you could learn that this was the time to buy, and I will deliver this to you, and these opportunities will come every few years, and if you take the big steps at that time, your life is already taken care of. If I don't deliver this to you in our courses, then I will refund your money. I promise you that. You can hold me to this. You can make it a public statement. I made a public statement right now. All right. This is what we are committed to. We want you to play big, and we want to do it. We want you to do it on your own feet, not depending on somebody else. No external resources at all. All right. That's why phase 2 is there. The part 2 is there. You come and present. Next, I do the India market review. The India market review is a session I do every Friday from 7:30 p.m. to 10:30 p.m. and we discuss the markets live. We look at what happened. Actually, this is not 6 years. This is the last 8 years, 9 years now. We look at what happened in the world. We look at what happened in India, politically, financially, terrorism, everything. And we look at what happened to the stocks. We look at all the 50 stocks in the Nifty or all the 50 stocks in the Nifty Junior. We have started to look at the non-index stocks also. And we look at what could happen in the future, in the next week, from a trading perspective, from an investment perspective, from a spot perspective, from a derivative perspective. All this is discussed. So you're actually discussing markets every Friday evening. All right. The sessions are live and interactive. If you want to participate in the live session, you're welcome to do that. If you don't want to do that, or for some reason you're busy, the session will be recorded and it's put up on our YouTube channel. Now, how do you use this session? There are two things about this session. It is one, an educational session to give you hands-on. You are expected to have a certain basic level of understanding of technical and fundamental parameters. It's not a teaching session at a basic level. All right. Those concepts should be grounded in you. Second, it is hands-on live analysis. You're looking at live opportunities to go into the market in the coming week, in the coming month, right? So this is what we do every Friday. Those of you who want a lot more information on this, I request you to go to our YouTube channel, all right? Watch BIC, just go to YouTube and you will see that we have a channel there. So go to YouTube and Google and search for Watch BIC, right? In that Watch BIC channel, it's very basic, like our website. There is the playlist called India Market Review. Okay, click this playlist, and I've been doing this for the last 4-5 years, but we unfortunately so this is I'll talk about private videos in a while, because I'm not logged in at this point to our official website. So what happens is that, oh, it logged me in now. Okay, so what happens is that for the last, I think, 4 months it's been there. You can watch all the videos on this channel. They are now public and free. You will get a sense of how the analysis is done, and if this is good enough for you, then you're most welcome to just track this. The latest video is never free. All right, so all right, sorry about that. All right, the latest video is never free. There's a charge for it. The details are there on the website, okay, on the Bangalore Investors Club website. So you need to go to the India Market Review, IMR, right? And the thing there is that once the video is 4 weeks or older, then it becomes a public video. The latest videos are paid only, but as a member of the Equity Next Step course, if you take this, you can attend any 4 IMRs after part 1 is over. So it gives you a hands-on experience of how to do analysis on a continuous basis. So here's the thing. Over these 5 weeks of part 1, there'll be something or the other happening in some corner of the world, whether it's India, whether it's the US, whether it's Europe or Africa or something. And we will connect the dots basically. We will connect how this is impacting that, and that is impacting this, and how something in India is, some stock in India is impacting, and how we can take advantage of it, or sometimes it's too high a risk and we should stay away from the market. So this continuous background discussion that keeps happening, wherein you know how to connect the dots, and that's the real skill that you need over the long term. All learning this FA here, TA there, here, there, and all is fine. It's like ultimately having the engine, the petrol tank, the suspension, but they all have to work together. If you don't integrate it, then where's the vehicle? There's no vehicle. So what we want to do is create that whole system, that whole holistic thing that you can actually rely on. So part 1, education, knowledge transfer, all that. Part 2, this is where you step up to the plate and you do these sessions. You participate and do your own your sessions. And 2, the India Market Review. And 3rd, like I said, we have now partnered with one of India's best, service providers on software tools and all. It's all free for you, right? So normally you get only a 1-week trial on that. We've arranged that you get a 2-month trial for free with live data. All right. So this is what the whole Equity Next Step course is about. It's our flagship course for people who, like I said, want to actually create meaningful and significant wealth for themselves. Lastly, I won't take too much time on this. We have the mentorship program. For those of you who are looking at really, really deep commitment, there's a 2-year mentorship program that BIC offers. All right, just go read it up. All right, and I will be happy to talk to you with anyone who is interested in the mentorship program. It is a significant amount of time, commitment, and effort over 2 years that you will have to put in if you're serious about it. But we are talking not only about equity there, we're talking about multiple assets, we're talking about commodities, we're talking about forex, and now there's a small group of us who's talking about global stuff, right? So this is where BIC is. If you're looking at the mentorship thing, it starts with the Equity Next Step course, and then we build up and build up and build up. So just go read it. There's a free introduction that I can arrange for 2-3 hours, and you can have all your questions answered. So there's knowledge and skill development. There is, you making the best of the market, and you doing your own investing, your own trading. And there are, by the way, a set of people who have already recovered their entire course fees for the mentorship program, and we haven't even finished the first batch halfway through, right? So that's the ultimate course that we have. Of course, there are all the other things in between, derivatives, technical analysis. In that we have Elliott wave, we have point and figure, we have indicators, and there are going to be more things that come up. We are going to be talking about portfolio management, portfolio construction. There's a whole deal. Come and meet us. We'd be happy to interact with you. I'll be happy to talk to you. Even if you don't have to do any of our courses, all right? There is absolutely no obligation. It's just we want to create a community of serious, committed people who can come and share their dreams and support each other in creating long-term, meaningful, life-transforming wealth for ourselves. Lastly, as I end, the best way to stay in touch with us is a couple of things, all right? So we have a mailing list. And if you want to be on a mailing list, send us an email on this address, all right, with your full name, your email, and telling us you want to be on the mailing list. I'll send you an invite. You can accept that invite, and then you'll get updates about our activity. It's all free. The other thing is if you want to be on our SMS platform, right? So if you want to receive SMS updates about our activities, some of you have already on that platform, then send me a SMS alert, okay, or send me an SMS or send an email saying you just want to be on the SMS thing. And we've got, I think, somewhere down there, mailing list. Yeah, so I'll just send that to me, right? Join BIC to my number and we'll put you on the mailing list, right? So this is what we do. It's done for passion. Of course, it's also done to make money, but this is not our primary source. Investing, trading, wealth management, that's what. And we want people, we want a community here which is passionate about the markets, doesn't believe in shortcuts, believes that it's going to take time and effort, and really believes that we can have a much, much better future for ourselves. All right. So I'm at the end of the session. Thank you so much for being with us today. I just leave you with this chart. I leave you with this. I leave you with these estimates of what I think the market is, not I think, that's what the market is saying we will do. And come to our website, bangaloreinvestorsclub.com. Come over, have a talk. Just love to meet all of you, right? So with that, thank you very much. I'm going to stop the session here officially, but I'm going to stay back, and if you have any questions, you want any interactions, then just ping and we'll continue this conversation. But otherwise, thank you. I hope the recording should be available by tomorrow morning or tomorrow afternoon. We'll put it up and send out a link on the BIC webpage, and you can have a look. You can look at it, ask your friends, family, review. You're going to get more and more insights as you go along, right? Thank you and good night. Actually record. I would really love to get feedback from all of you. Please take some time to, I know time is valuable. I'd really love it if you could take some time and send in feedback about anything and everything that we spoke about today. Right, the content, the delivery, the time, what you preferred, what you did not like, how to make it better. If you want a session at your office, at your club or at your association, we'd love to come over and do that also. So please write in with your feedback. Let us know how it went and how to make it better. Right? Thank you very much.